See if this does it. So many things can go wrong when you stream. It's just crazy to me. Let me see. Okay, so it looks like it's going now. Try one more thing. All right, I'm not too sure what's going on with my streams, but it looks like I can't get live on Twitch and or X right now, but I think YouTube is working. So let me just set out a quick announcement and let everyone know that that's going to be the case. I'm not too sure what's causing the problems. My apologies. Technical difficulties. Alrighty. Good morning, everybody. I want to make sure you leave some chat, like comments in the chat and YouTube to make sure that I can see them, to make sure that it's even working here. Good morning. Okay. Coco unplugged the cords again. See, now the chat's not even showing up on my end, but I'm seeing it on the main platform. So give me a second, people. Gosh, this is so annoying. Can't just have a stream that just goes smoothly, huh? Just gotta be all kinds of crazy. Okay, there we go. I see your guys' chats now. Holy moly. Holy moly. All right. Good morning, everybody. Let's take a look at the market. So obviously we had a lot of news come out this morning. How's the market reaction taking place? It's up. We got Fed Jerome Powell speaking here fairly soon at 9:30 a.m., so about 2 hours. That's Pacific Standard Time. That's where I'm at, the Pacific Standard Time. All right, for those that watched the stock market brief video, we talked about, on the last stock market brief video, we talked about some of the daily expected moves, weekly expected moves, and gave updates on monthly and quarterly. Let's take a first look just how the market's doing currently today, or trading currently outside of the daily expected move. Okay, if I take a look at the advanced decline line right now, looking at the S&P 100, the top 100 stocks in the S&P 500, All right, the larger market cap names. There's 62 advancing stocks, 39 declining stocks right now. So clearly we have more bullish price action, but only a few of these names is really driving market price action right now. And we can look at that by looking at the highest market cap down. You can see Apple was up is up 1.85, seeing a little bit of kind of like choppiness, but up 1.9, we'll call it percent on the day. Google's up 1.3, but the big mover here in the NASDAQ was Tesla. Tesla's up 5.7% on the day. This could be for multiple reasons, right? One, because it's sold off and now it's bouncing back. Two, it could be because of what happened over the weekend and Elon Musk made a statement. And also on top of that, I mean, if you look at the news platforms, like there's been some weird stuff as far as like headlines go. There's been a lot of kind of controversy about that on X. And perhaps that could be a reason why Tesla is also making a move, is because people are starting to kind of wake up to that and they're just focusing in here. Could be multiple things. That doesn't really necessarily matter. What matters here is what price is actually doing. And we're just seeing kind of a reflexive bounce into and around probably, let me see here, weekly expected move, 265.50. Let me just edit this. Yeah, we've already tagged into the upper weekly expected move today for Tesla. Look at it. We tagged into it. Look at that. Crazy. We tagged into the upper weekly expected move for Tesla. And I mean, the market's been open for just over an hour and a half. So big, huge move into the upper weekly expected move. Holy macaronis. Okay, so those are some of the bigger movers in the market as it stands right now. If we take a look at the gamma levels, $5,700 is still the call wall, and we're not like crazy far from that. We're about 40 points away. Maybe perhaps if the market likes what Jerome Powell sees, we go up into this area. But the main other levels here is still 5,600 and 5,650. We've been kind of floating around these areas. So to be pinned within this range here for the week makes sense, because we do have an option expiration on Friday, and it's typical to get pinning action. And if we get pinning action, what we need to wait for on Friday is to really see, and into the next week, is where traders start to reach out to and go from there. So if I show you just a net gamma chart, you can see here, there's the 5,700. So traders are clearly reaching for 5,700. There's 5,650, which we're slightly above, right? 5,650. Well, that's on this chart. If you actually look at SPX, like CBOE, we're basically right there, right? This was one of the levels we called out on Friday, saying that 5,650 was pretty much the upside. And we came into this area and then we broke from it. And right now we're just kind of pinned around that level, kind of seeing a little bit of move from that. But we still, like I said, have Jerome Powell coming, so this can spark all kinds of stuff in the very near future. As far as bookmap goes, we do have some interesting level right here at 57.25 on ES. It's not like a crazy level, but there's 322 contracts hanging out up there. And then below us, we have about the daily volume weighted average price, which is right around 56.92. Those would be some of the probably more important levels for the day. So those are the two levels that we'll keep an eye on there. Okay. Let me take a look here at the stream. I want to see what's going on here. Not much. Okay. All right, so this is the SPY. Let's take a look quickly at the market net flow. Market net flow saw a little bit of choppiness this morning, but we have a bullish divergence. They're both above the zero line, but we do have convergence. So this is, if you're trying to trade with the trend, it would be clearly to the upside as it stands right now. If this turns gray, we can see price come back in. And like I said, it can change very quickly with any sort of macro data that comes out. And the big data, or the big thing that's going to be today, would be just Fed Powell. Okay, so yeah, market's been kind of just up outside of daily expected move. Market net flow, very bullish. Any 0-date levels to keep an eye on? Not really. So it's kind of interesting to me because 5650 is kind of that level. Maybe 5675. They're starting to reach out for it. But as the market's pressing higher and higher, not too much is changing from this perspective on a 0-date. So if 5,700 really started growing here in the very near future, I'd say that would be the target for the day. But yeah, pretty bullish overall. Okie dokies. Let's take a look at some of the sectors. Take a look at some of the sectors. Actually, let's take a look at IWM. IWM is continuing its breakout. This thing is not being stopped so far, so we're still getting continuation. If you're in the trade, awesome. You can always update risk parameters by updating stops to the low of each day. However you see fit, take partial profits, whatever the case may be. I wouldn't be chasing up into these ranges up in here. I'd be letting it consolidate. If you chase, you can, get stuck in a consolidation for quite some time. We're pretty extended here, especially looking at the 5-day moving over here. And I know if I slapped an RSI to it, I'm sure that it would show extended too. But we're seeing a breakout, right? The price action was so tight, right? Levels that we haven't seen since really the Bollinger Bands were as tight as we've seen since prior to the pandemic, right? And even since past that was going into 2018, which saw a lot of volatility too. And now we're seeing that explosive move there in IWM. You can see here also like KRE is making a big move as well, breaking out of this little kind of contraction pattern or sideways range, I should say here, for regional banks. And regional banks, there's a lot of regional banks in the IWM. So if this came in a little bit, if some energy names came in a little bit, that could bring in the IWM. Okay, so XLE is one that's catching the bid. It's breaking out of this little downtrend here too as well. I will say, so this right here was the higher low we were talking about. We haven't actually hit a new higher high yet, but this is technically now a higher low. Okay, higher low, no higher high. This was the breakout they were watching for. This was the level that we're eyeing in on, not only because it was around, I think, the 200-day moving average, but it was a level of confluence. We had the 50%, 61.8% golden fib level. And then it was also pulling into like the lower portion of the zones. It just made a lot of sense for a potential bounce here in energy names. And that is what we're seeing. Financials, we had some financials reporting. I think today it was Goldman, BlackRock. Not really much action over here taking place on BlackRock and Goldman Sachs. Goldman Sachs up 1.43%. A lot of these financial names look pretty darn good. I was looking at AXP. Yeah, it broke out of its consolidation. Let's take a look at Bank of America. Bank of America has just been continuously grinding there. This one's going to be reporting, I think, tomorrow. Yeah, tomorrow. And same with Morgan Stanley. Yeah, all these financials are just like sitting at highs for the year. XLY also made a new high on the year today. Tesla, Amazon, right? Those are what's in that. We're seeing a big move. Those two stocks helping lead. Amazon still is just consolidating this recent break. I still think that there's opportunity in here, especially if it comes in a little bit and tries to backtest this prior breakout area. I think that could be, if we see some strength from that level. I don't know if it's going to come down there, but if we have that happen, that could be a very interesting play right there. So I'm interested in there. Microsoft also, I mean, strong stocks typically get stronger. Here's a little bit of a pullback here. We're starting to see a little bit of strength. So for it to come back up and consolidate or even go like this and, more than possible. You don't want to just throw, these names out because they saw a little bit of volatility. They've seen volatility, they make another high. They've seen volatility, they make another high. They've seen volatility, they made another high. They've seen volatility, they made another high. This is the basic principle of trend following. Strong stocks get stronger, weak stocks get weaker. The call wall chart that I share is from Gamma Labs. I'm upset that my other streams didn't load. It's very annoying. Okay, so there's XLY. Let's take a look here at XLK. It's up about 81 basis points. Nothing's wrong with tech, right? Higher highs, higher lows. Nothing sticks out from like a trading opportunity at the moment right there. XLC, still cranking there. So let me see here. I want to just look at what's the holdings there? Yeah, Meta and Google. I mean, gosh, it's all the same. And then semiconductors. There was some semiconductor name. What did I just do? Oh my gosh. Thinkorswim, dude. I just deleted one of my sectors. Now I got to find out which one it was. Semiconductors is still consolidating after its kind of high volume bearish engulfing candle right over here. We've seen that here. We've seen that here. And it's just consolidating sideways. I was liking SMCI. Let's see here what happened. I know it gapped way up this morning. I want to see what it's doing. It's really just consolidating. But SMCI had this pretty nice contraction pattern here. You can see we have, matching highs for the most part, higher lows. And then for the last 5 or so trading days, we've been in this very tight trading range. And, when things get tight, they expand. Well, we saw expansion right out of the gate. We came back in to back test it. We're above a rising 5-day moving average. So, I mean, this is still, I think, within, parameters of a good entry. You just want to manage your stops how you see fit on a name like this. They are higher beta names. I'm not going to be executing into anything prior to Powell unless if it's just a very, very clean setup, but or it's going to be short term. Some of the names that I talked about on last brief was we talked about a crud ton of crypto miners. Let me see here if I can bring that up. Yeah, so we talked about crypto miners, and we talked about kind of where Bitcoin was and Ethereum, how they're kind of flagging out. And the big key aspect there was they were coiling up to a point where we said it looks like there's going to be a pretty decent sized move here in the very near future. Now, I didn't think it was going to happen this weekend, but let's pull up some of those names just to see how they're kind of responding and reacting today. And then also I talked about miners, so I want to view in on that too as well. Not crypto miners, gold and silver miners. Okay, so I'll talk about Coinbase first. That's a pretty well-known one. Yeah, there you go. Geez, man, you got to be somewhat quick on this stuff. Unfortunately, it's like the market brief video comes out, and then it's like, you wait till next morning and then news comes out and you gap up. So you can chase the gap up in some cases and then have a tight stop if it makes sense for you. I mean, this would have made sense in hindsight, but it's up 11% on the day. This is just what happens. Things get super tight and then they just expand. They freaking explode. And, if you're long it, you get volatility expansion on your side. And that's why I love to trade like this. It's just sometimes the move happens prior to being able to get in. Or you got to be very tactical if you're playing the gap or maybe a breakaway gap and just be prepared for that kind of stuff and still manage risk. So there's Coinbase. Overall, I mean, this is still sideways. So there's could flag out eventually, or get some more follow through and then pull in and then set up again. So I think that these are worth putting on the radar because Bitcoin today was, up. Well, Bitcoin futures is up 9%. Because obviously they're closed on the weekend. Bido up 10%. I'm interested to see the update on Sailor to Shift tool, but I'll pull that up in a little bit. I want to look at these crypto equities first. Mara, right? That was up 9% the prior day. It's up another 10% today, following through to where we kind of said, up here into this range. So we'll see how that plays out. We had CLSK that had a great risk to reward, and that thing is up 9.75% on the day, right? Price action got very tight. We expanded. And we just said basically, if it cracks below 15, get out, watch, but right now it's kind of just in this trading range. So for it to come back up into this range, sure. I mean, why couldn't it, right? It's been doing that. Okay, so CLSK, Riot was another one that was getting incredibly tight. Another big mover here, up 8.31% on the day. Come on now. MicroStrategy, I'm interested to see that one. 14.3% on the day. Gee, mini Christmas. See, these are the names that I'm like, oh man, I wish I had them one day earlier. Cypher, up 15% on the day. These are all names that we talked about on the last brief. So yeah, this is what happens, people. Things get super tight, they expand, and it can happen very quickly. So this is why I look for this stuff. That's why I've shared on the tight list. Some of these names were on the tight list, obviously, but a lot of these names moved prior. So I talked about silver too on the last brief, and silver's up 0.5% today. It was down slightly. I mean, overall, the chart of silver looks pretty darn bullish. Okay, and we talked about the correlation between silver, the dollar, and then also silver and gold miners. Let's take a quick look at the dollar, see where we're here today. If the dollar's, I would imagine the dollar's down. It's basically flat on the trading session. So my thought here is if the dollar does bounce, it could potentially pause silver a little bit longer, and miners could potentially come in. So we'll see. I was looking at Dust. Dust was up about 2% on the day, and this one's coming in a little bit deeper. It's down 1.63%, kind of coming in just a little bit here. So I still have a position. It's small, and it's against a lot of long positions. And if silver starts to really make a move, then I'll probably just get out. But it was up earlier in the trading session, and I considered just like, should I exit or nah? I just stayed in. And I'm looking to potentially scale a little bit better. But that's just kind of where that one's at right now. Okay, let's see what else. Can do a quick portfolio update. I have some decent exposure on, but it's nothing honestly too crazy right now. Some lower beta names. I'm looking at, I have a utility in my portfolio, CEG. Honestly, if it breaks down probably the low of today, I'll probably just be getting out, and I'll just wait for it to set back up. So this little consolidation is what I'm looking at for a potential breakout follow through. I do have a little TME in there still, and TME still to me looks pretty good. So TME is just consolidating right now after breaking this downtrend. So once again, if this starts breaking down, I'll probably just get out and just look to reset back up and see if it comes and breaks this 15.5 out. But overall, I mean, this trend is holding up pretty good. Have a little bit of dust. Yeah, I mean, and then I'll screenshot it. Give me a second here. Yeah, I mean, my portfolio is right now at all-time highs. Screenshot. That's this one, and then I have Interactive Brokers too. But Interactive Brokers I've been focusing more on this one. Interactive Brokers has been pretty flat for a lot period of this year, but I started getting a lot more active in it in the last month or so. So let me see if I can open that up. I gotta do all this security stuff to get into that account. Give me a second here. Let me go back to the SPY and we'll update that. What did I do? Refresh, resend. There it is. This is just 1 month of performance. Oh, nope, don't want to show that. But it's updated for do I want to show that? Give me a second here. Okay. Would like to be able to add the benchmark into it, but it's not letting me do that. There's the interactive brokers for the month. So the reason why I'm sharing this, it's not to say, oh yeah, look at check it out, like doing good. I'm sharing this because the S&P 500, it's been literally one direction, right? It's been super easy to trade. I mean, look at the SPY. It's for the last year. So we're here in July. So basically all I'm showing is from July. If I look back to the prior July, okay, this is the prior July. Okay, so this is where being an active trader really plays out. So do you notice how here was the beginning of, so I'm looking at, so give me a second. Dang it, okay. 1 second. Okay, so take a look. Do you see what an active trader, what being an active trader can do? So do you notice, so this is July now, right? And this is July. I'm showing you one full year, one rolling year. And do you notice how this was kind of just flatlined? Okay, well, what was the market doing in that period in time? It was going down, right? So during this volatility, I didn't get really active up until October, right? I wasn't even active really around these areas because of the volatility. It was just a little bit too wild and wicked, right? I just didn't have a good sense of the market and so forth. So I started approaching the market significantly more here. And I talked about that. If you go back to these market briefs, you can be like, oh, like, wow, what was he saying back in these days, right? I was saying probably be prepared for a market turnaround. At least that's what I'd imagine, because that's when I started going long. Okay. And then look at, the market has been straight up. So the reason why I'm saying this is because the market has been one direction. All right. And that doesn't mean what I'm doing, what I'm sharing with you is skillful. It's literally just buying something and holding it, and buying something and holding it, and then selling some, and then looking for another opportunity, and so forth. The real skill in all of this comes in when you actually start to see volatility, when you start to actually have to deal with real turnarounds in the market. For example, like in 2022, I didn't lose anything in 2022. 2022 was a wicked bear market. My portfolio was flat, okay? Here, I didn't lose anything. I was basically flat. I took shots at trades that made sense, and I lost a lot of them, so my position sizing went down, or I was heavily in cash. And then, luckily enough, we started playing back with the trend. Everything started to play in the direction. And more recently, what I'm noticing here is, and this is why I want to be very clear here, is because there's a lot of people in the Discord or in the Patreon, or they'll come in new and they're like, whoa, like, holy moly, some of these trades, they just blew through the roof. Like, oh my gosh, he did so good. I don't have control of where these stocks go. I don't, okay? I have control of what I can risk, and I look for tight contractions. And if it keeps going and going, people might look at that and be like, wow, how did he know it was going to do that? I didn't know it was going to do that. I got lucky. You get lucky time and time again. And I want to reiterate this, because if you see something and things have been going really well, what tends to happen through the cycles that I've been trading, right, from what I've seen, is people get overly confident. And when you get overly confident, they start to press their luck a little bit more, and they think that things aren't changing when they actually do change. And that turning point could be a dramatic experience in a portfolio. Dramatic. Like, it can make or break years of hard work in a day, in 2 days, in 3 days, in a week. Take away years of hard work. Okay? And I want to reiterate this because it's been so easy. This market has been literally, you buy it, and everyone thinks they're a genius. We haven't seen actually a difficult market yet. And we will. So one of the notes that I put out in the Discord, if most of the people that are watching this stream probably, because there's not that many people on this stream. Unfortunately, I don't have any other stream on other than YouTube right now because it wasn't working. But the note that I put on was, I just finished posting a few charts on my radar. Tomorrow I plan on going live, blah, 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 blah. Okay, and then we had significant news over the weekend. So in times like these, it's incredibly important not to throw caution to the wind. Stay focused on managing risk. I know it's been tempting to push limits, and if you do, always have a plan where you're going to exit if things don't work out. Okay, many trades have been successful the last couple of weeks. The party is still going on for now, but that doesn't mean it's always big green candles. Today is a big green candle. So far, we still got Jerome coming out. Could be even a bigger green candle. Could be even a moonshot candle. You know what I'm saying? We don't know. Not too far off that 57.25, the one that we kind of eyed in on, by the way. Let's take a quick look here. I'm done with that. Let me close my little thingy out. Okay. Yeah, S&P 500 now is, we're outside of the upper monthly expected move by a nice margin here. We've been seeing some pretty sharp moves here to the upside, and the upper weekly expected move is not horribly too far away. So if I'm going to be scaling into like one of my positions at like the short side, I'm waiting for more up into these ranges for the S&P 500. Okay. Market net flow still remains bullish. So like I said, you know, if you want to fight order flow for the day, be my guest. But you know, strategically speaking, that's a losing strategy when you fight against the market flow. You can be tactical, you can be fast, you can try to be quick, but it's significantly easier to just trade with the flow. So when you see the flow is bullish, you obviously want to get in somewhat early. If you haven't got in early, then you wait for consolidations, pullbacks, and so forth. And you know, look at the SPY, right? You can look at this and be like, should I even trade today? If I missed all this stuff, should I go long right here to play it up to the weekly expected move? Right? Things would suggest potentially, yeah, that could be a good idea. But it's made an aggressive move. You missed out on a portion of it. It's outside of its daily expected move. If you're not going to wait for consolidations, you may just get caught in a sideways trap. And you might actually, obviously, we might pull back in due to probabilities. So yeah, you'd be right to just probably just pause out for the day and look for better setups. Okay. And there's nothing wrong with that. You can always come back. The market's always going to show share opportunities. Okay, let's see if it's been reaching out any further here. $56.75 is the level to watch. We're not too far from that, so I'd say got a little bit more of a push here. A little bit more push there, and then probably quite a bit more on the. I don't like the look of that. Yeah, I don't like the look of this up here. Like, there's just very tight trend line, very algo driven, very small bases, and it's getting very tight. I would wait for like a break of some sort, some sort of a break, and then consolidate. Yeah, but up here, it's just, do you see how it's kind of thinning out? It's like, think about this like you're climbing a mountaintop, and the higher you go on the mountaintop, like the air gets thinner and thinner. That's kind of what this price action kind of looks like right here. It's just getting very tight, right? Which means we can, pop up further. But yeah, I would prefer to just be calm, be cool, collective, and then wait for some sort of break consolidation or so forth, and then go from there. Longs look great right now. Okay, and I want to look at some individual names while this is kind of happening. I just want to update some things on my end. Give me a second here. Why do I keep getting kicked out of my dang stuff? Stop doing that. Okay. So yeah, 57.25. Let's watch this area for ES. It looks like it's trying to come fill that level. So that's where I'd be kind of keying in on. I want to look at some of the bigger market cap names right now. So yeah, Apple's really driving things here. Up 2.4%. See Microsoft, absolutely bonkers move there, and Microsoft there too as well. Nice big bid. Like I said, right, we're pulling back to see this strong stocks get stronger, how we talked about in the early portion of this stream. Makes sense. NVIDIA's not doing much. It's really just kind of consolidating. I actually don't mind the look of this. You can see we have this big day, right, on big volume. Then we had a little bit smaller range, and then we even have a smaller range here today. it's just consolidating. It's just consolidating at this current moment. So let's go back to NVIDIA. Actually, I want to follow through on that. So coming tomorrow, like say if we close like this, if the candle looks like this, I'd be watching for a break of the high of this candle or a break down below the low of this candle, right? This tight range. If it expands from that, you can see a potential, you know, few point move up, few point move down, whatever the case may be for a quick trade. All right, let me get a sippy. Google at the highs of the trading session. Amazon's still not really doing much here. Below its 5-day moving average after that kind of big break over here. Could consider to be flagging. Like I said, I would prefer if Amazon came in a little bit. Is it going to happen? Nah, I don't know. Netflix made a nice big bounce here too from its lower end of its zone. Okay, and then Tesla is obviously the one that's up 5.45% on the day. So this obviously made nice big move, and this literally respected its weekly expected move today quite nicely, like within like pennies, you know, came right into it, and we started to see a break from it. It's typical to see these things come back up, but it's already made a pretty substantial move. Okay, let's take a look here. I want to see what yields are doing. Yields up slightly on the day, just kind of going sideways. Dollar flat to slightly down on the day. Anything happened to the gold space? Gold catching a nice bid. This is interesting to me, is seeing gold is pretty much at a new high. So we're pulling into an area here on gold that have seen prior, you know, areas of supply that we've seen, you know, pushes from. And we're seeing a strong move into there. So I would like to see gold consolidate a little bit. And a lot of this move has been driven, this recent run right here has been driven by a falling dollar. You see that? Let's pull up GC. So overall, I mean, gold looks pretty strong, and then silver looks, like I said, it's pretty strong. But they're just digesting here. And with the dollar down like this, and you know, this is where it gets crazy, is you typically have like the dollar can be a flight to safety, which has just not been the case these last few trading sessions. Gold could be considered a flight to safety. And that's where people have been kind of rushing into, even despite seeing the markets up where they're at. And gold's up there following the lead. And then you look at things like utilities has also caught a pretty tremendous bid. It's coming in today, but pretty nice bid here on utilities and then coming back in. A very awkward and weird market. Equal weight did break out of this type pattern. We saw IWM. We talked about MDY, right? That was another big name. Look at this thing flying. This is what happens when things get tight. Boom, we exploded to the upside. I think we talked about MDY. I think we talked about MyDo. Hey, hello, what's up? Like, right? That's up 13, 14%, coming back to those highs. And then we talked about the Vanguard Fund, VOT, mid-cap growth. Bam, nice little breakout there. Let's take a look into XBI. All right, here's another one. Just a nice big solid breakout. These aren't things that I'd be interested in chasing. These were names that traded, right? And we caught a nice move. Some people might still be in it, and you could give it the room that it needs to breathe. But I don't like chasing things up here, up in these ranges for establishing new positions, okay? NVIDIA's ascending triangle. That makes sense if NVIDIA's an ascending triangle, because I just saw NQ and I said kind of the same thing. Yeah, like, so this move right here, how it's kind of like, I mean, right, we fell already, but the reason why I said on NQ is like, if you climb a mountain and see how like the drops are getting, like they're decent size, smaller, maybe smaller. It's like the air's getting thinner up here. That's my best analogy that I can use. Like look at NQ. Look at it. Like look how thin it's getting up there. Right? So I would say like just be cautious of like that's why I would be like I wouldn't add here. I wouldn't short it. I wouldn't short it. That's not what I'm saying either. So let's get that clear. I would say I'd be waiting for, consolidation, but when things move like this in this like algorithmic type move, like let it take some sort of a break from high elevation, a breath of fresh air, right? Take some oxygen in, reset itself back up, and then go from there, because like it's wild, right? It's wild. That's wild. It might be doing that right now, right? Maybe. But this is what happens, right? It gets so tight, and it expands. And it could expand to the upside, but if it expanded to the upside, I would actually probably look to fade that. But it didn't. It just kind of came in a little bit. And it's not coming in a lot. So once again, it's not coming in a lot here, right? As in this current moment, it's not. But look at the range of the volatility, the candles, and then compare them to the last. This is a 30-second time frame, people. I'm looking very micro right now, but it's still, nevertheless, markets are fractal, right? Look at the range of the candles to the left, right? They're taking out, 3, 4, 5, 6 candles on a quick move. And this is very typical price action when these type of things happen. Does that mean, it's over, it's game over? No, man, this thing could go like right back up. Like, we don't know. We don't know. So you got to be just calm, patient, and wait for the real setups to actually kind of show themselves. Right now, market net flow, still bullish convergence, bullish divergence. Market, right, is way outside of the daily expected move. It's coming in a little bit here. Big deal. Big deal, right? 56.75, right, was the level that we kind of keyed in on from a 0-date perspective. Let me clone this out, and I'll show you. Whoops, what'd I just do? No, what'd I just do? What is going on right now? This isn't right. Oh, there it is. Okay. Okay. 56.75. I mean, look at this. It literally came right up to it. That was the 0-date level that they started reaching for. That was the call wall, right? And are they reaching further out? Not right now. They may later. But there you go. It's why it's so important to pay attention to these gamma levels. Right? So if you knew this, if you were trading and you were long, and you saw it coming, did I say 56.76? 56.75. Yeah, 56.75. If you knew that, you've been like, this could be a potential good area to take a little bit of profits off. If you're trying to be tactical short, you might be like, maybe if it starts pushing from this level, maybe I'll try to take a tactical short. It's not my style right now. I'm just not into that, especially when market net flow looks like this. If it was doing this and this was grayed out, I may consider it. But there you go. Good live little setup there of what, good live analogy, and then play out, as small as it is, but good to see this if it happens again, right? Good to see, kind of how that was observed and analyzed for when and if it happens again. Okay, let's take a look. We got some other names coming in here in the chat. If you want to put some names in the chat, we can pull up on the daily time frame and see what's good. Yeah, we'll take a look at IWM, UNH. Yeah, let's take a look at UNH. UNH ain't giving us much. Let me put on some averages. Shit, let me think here. Let me see if I can reset this. What the? Do I have? Did I have two Thinkorswims open? How is that even possible? What the heck? That was weird. Give me a second here, people. I'm gonna log back into Thinkorswim. Did anybody see that? That was weird. I don't even think that that's possible. Uh-oh, Coco's barking. You know what that means. Got to use that JWAP. Yep. Okay, so we're back here. Let me close some of this stuff down. Let me, okay, let me see if I can do this. So the daily volume weighted average price is not too far below us. All right, we're seeing a little bit of sell side activity. This is what happens when things get too thin. Gets too tight. All right, let me see here if I can reset this. Okay. What was I doing? I think we're pulling up UNH. Let me get some of this off my screen. I don't want all this stuff. And I do kind of want to see the opening range here. And I want to use 1 minute because I prefer to see the volume a little bit cleaner. I'll just do 1 day. And I also want to add the opening range for 1 minute. Okay. Okay. Yeah, so let me go back to UNH really quick. Yeah, so so a lot of healthcare names look really good, in my opinion. I think healthcare looks good. I think utility stuff looked good. I think energy stuff looked good, which is all different from what's actually doing good. Tech, right? Tech's been also very strong. I mean, it's a very wide market that's been doing good, and then up to more recently, a very, very wide market, right, with a lot of the small cap names. But let's take a look here at XLV. And XLV, right, has been in this sideways range, and we recently broke out to a new high for the year. It's coming in today a little bit. If I analyze this, look at what's one of the top holdings. It's UNH, right? The next top holding is Lilly, LLY, and this has been straight up, right? So these things are going to need to consolidate, right? Eli Lilly, right, is going to have to here consolidate in the near future. So would I be chasing these names here like XLV up? Probably not, but you can look into something like Pink. I wouldn't be chasing this either, but this one saw a pretty substantial breakout. I think this day, I believe that came from, I think it was from VRTV. I could be wrong. And then also you can look at some biotech, right? So a lot of these names have been looking very good and breaking out. I liked SRPT, PTA Therapeutics. So I know I'm changing the subject from UNH, but I'm looking for opportunities in the area within the space-ish kind of, right? That are actually look actionable. Like UNH to me didn't really look too actionable. I think that if you're in it, it's kind of like fine because you caught a nice move here, but it's going sideways, right? It's just going sideways. So if it's going sideways, like you could just continue to go sideways. It's until it sets up where it gets like tight, you know, maybe these things catch up a little bit. And then I'm like, okay, yeah, now it's ready. Those are my type of trades. Doesn't mean it has to be anybody else's type of trades, but so SRPT, this is volatile, right? This one saw a huge gap up on, I don't even know why, probably some sort of news, obviously. And that's the thing about these biotechs and therapeutics and all these kind of things, man. They go crazy. But I'm looking at this. Price is coming in. Volume's drying up. So let me bring it over here to TrendSpider. We're getting some market move here. So give me... I'm just going to let that play out right now. And I'm going to go into the daily time frame and stay focused here on SRPT because I'm not really looking to trade that crazy stuff right now. Okay, so SRPT. No, I'm not saying this is actionable now. Calm down, everybody. But I think it's worth eyeing in on Okay. You get this big gap up, right? And then it came in, volume's drying up. Maybe like you can anchor in a volume weighted average price. I was hoping it'd be lower than this. Let me see if I anchor it to there. There we go. Okay. So you get this move down. It came up to try to get this anchor volume weighted average price on this specific news day or whatever this was. It got rejected, and you could see it's actually been holding rather well. And now it's starting to build some higher lows. It's getting very tight. Now, somebody can look at this and be like, yeah, but this looks like a bear flag. It can break down. I'd say, yeah, you're absolutely correct. But it can also break to the upside, right? Because you have this move on your side. Yes, the short term, it's been getting drowned out. But if it does start breaking above, say, which it did kind of today, it's doing a little fake out. So if, like, for example, okay, let's just say if you traded this today. Let's say if you traded it today. Let's say if price started here and you started playing the breakout of this high. Okay, so you'd be underwater. Where would your stop be? Most likely it would be right here. So now I'm looking at this now. I'm like, okay, well, if I enter in right here, my stop would probably be here, but that would be an early entry, right? So yeah, the high beta name, but my point is, if it does get above this and actually hold, you can see it's acting as resistance, but it's been testing it multiple times and price action getting tight. If it can break above it, I think you can target for this upper daily volume weighted average price right here. Maybe even right here, like right in this area, kind of how this acted as, the low of this news day, then it acted as kind of like a level of support, but then it cracked down, traded around it. So this little area here could be a very, clean target on a breakout where your risk is limited. So let me draw this in. I'm not even going to say for entering now. I'm going to say for entering here. So this area, and then your risk would be this area. You see how you kind of can visualize that? So if you take the loss, if you take the loser, if you take the L, you lose this much with the opportunity of that much. And if you do this over and over again, and you focus in on stuff like this, you don't need to get out fully, by the way, over here. You don't need to do that, right? You can take partial profits here. You can take 30% halfway. You can move your stop up to break even, if it starts breaking out, right? You can do so many different things on managing the trade. It's just, you need the data to show you and lead you of what to do. But yeah, if you do this enough, right, you end up with a name like Sphere, right? Look at Sphere. Look at this. Look at this thing. This is what am I doing here? What is going on right now? Why does everything look so different to me? Okay, so Sphere was one we talked about in trade ideas, right? And like I said, we don't know that this is going to happen. We're setting ourselves up for something like this to potentially occur. Price action got very tight in this larger wedge structure, but then even more importantly, it got very tight here. It was holding this low anchored volume weighted average price, and then we started breaking out. Did we think this was going to happen? Hell no. Of course not. We want that to happen if you're long, but we don't know that that's going to happen. It's actually more rare to see that type of stuff occur. We're just putting ourselves in a situation where the possibility of these type of things happening typically happen more frequently. Okay, so we say that, and now I want to just close in here on the SPY once again and go into the 15-minute time frame and say that the market conditions are in good spirit to allow for these type of things to happen, right? You have a rising 5-day moving average. You're in positive gamma territory, right? We're above the flip line. We're above the flip line down here at 55.60. Okay, so this is good market conditions for these type of things to occur. It's when we get below those and when things start changing that things could be a little bit different. Okay, so let's take a quick look here at the SPY, and then I'll look at the comments here. Give me a second. Gotta get a drink of my cough. Okay, so SPY came in a little bit. We're seeing it bounce up a little bit, right? Market net flow. We started to lose convergence here, so just be aware of that, but it's still rather bullish. Losing convergence here right now, which means you can have counter trend moves, which means that this little rally potentially could get faded. This can turn right back to green. We'll watch it. me see here. Yeah, we pushed a little away from 56.75. We didn't even get back to 56.50. So if we do start coming back in, I'd be just eyeing in on 56.50. That's a pretty key level there. We didn't even come down to the daily volume weighted average price, and we're seeing that kind of reflexive bounce. This is what happens when you know, like, okay, so here you go, right? Things, what do we say? Things are moving up. Things are getting very tight. You can call it a rising wedge. You can call it whatever you want. But what I say is you're climbing a mountain. It's super steep. Oxygen gets thinner and thinner. And sometimes you got to come back down for a little bit of a breath. You need to set up camp and take a little bit of a breather, right? Before you try to come back and scale the top. You see what I'm saying? Okay. Okay. Oh, brother. Okay, we're seeing a lot of good names come in here into the chat, so we're going to pull these names up here. I'm actually kind of interested. What is, nah, that don't matter. Go back over. Where did my stream go? Okay, cool. So we talked about UNH. Let's do, somebody said thoughts on Tesla. I did kind of talk about my thoughts on Tesla already. Yeah, I mean, you know, I wouldn't be chasing up here. We came into the upper weekly expected move. We tagged it perfectly and, you know, respected that. And then we're seeing a little bit of a push from it. But overall, I mean, it's consolidating that recent run up. So I don't think it's something that I'd be like interested to short now. I took a short over here, and I got like a 14% gain on it. I didn't short Tesla. I shorted TSLZ. It may be a good idea to do that again. I'm not looking to do that again after seeing this fall and this recovery and earnings around the corner. I don't care. Like, I made the trade. It is what it is. Now we're consolidating. And now I'd be more interested in looking for it as a long setup after things calm down and maybe reset back up here in the near future, okay? So overall, strength is still there. It's following through. We're seeing some volatility come in after a crazy run. Yeah, nothing big. Nothing's changed there. So that's my thoughts on Tesla. What do you think about NVIDIA swinging a bearish position in NVIDIA, basically? I mean, it kind of goes the same with Tesla right now. Like, right, I can see why, maybe because of this bearish kind of candle right here with the volume, and we might break down from this level. But understand that you're still in a very strong trend, and price action is just going sideways. You know, shorting a clear uptrend, because this is all what it is. If you're shorting an uptrend, like, you got to be very tactical, because like strong stocks typically get stronger. That's just always been the case. So when I short, like it's like a parabolic run, and then maybe I'll catch a little move to the downside, right? And I try to be super quick and tactical. My positions are smaller. I'm pretty much in, like, okay, I shorted DUS. I didn't short dust. I went long dust, and I was literally already considering getting out of it this morning. So I literally shorted right around, did I short right here? Maybe that's why that line is there. I got to look at my position. $6. Sounds familiar. So basically I bought right here, and I was already considering getting out in the morning, 16 cents. And I have a incredibly small position. That's just kind of how my brain works, right? Because why? I look at this, I'm like, it's been going, okay, let me pull up GDX. It's easier to talk about that. It's been going straight up, right? So to see a consolidation or a pullback, right, is likely. But I didn't short here. I didn't short there. I didn't short here. I let a move from a contractionary point take place. And now I start to look at things like, okay, what's the dollar doing? What's silver doing? Because I know it's correlated from an intramarket standpoint. And then I'm like, okay, now might be the time to start a position. And if I'm wrong, I get out. If I'm right, I typically get out again. So yeah, for me, shorting is just, shorting this market right now is, you got to just be really, really good. You got to be quick. You got to be good. You got to be fast. You'll have big break, like somebody, if somebody shorted up here and they held it, I mean, dang, man, you would have got your face blown, right? Boom, if you would have held it. But if you just got in and then got out, like that'd be a good little gain there. So yeah, I can see it going both ways, man. I can see it going both ways right now, right? Consolidation. Like, so for example, somebody in the Discord posted like this kind of like the same thing that we were talking about in Q, but they said for NVIDIA specifically, even in the YouTube chat, they said the rising wedge, right? They're absolutely right, right? It's like climbing a mountain, you lose air, and then look at it broke back down through just the opening range, and it's following through right now. So that was in my opinion, that was more of a tactical trade that this trader was looking at on a smaller time frame, and it made complete sense. Even in hindsight, if we don't have hindsight of this, it would have still made sense. Because we saw the weakness in the beginning, we came back up to an opening range. So if you started seeing weakness here, right, and if you entered in right around here or whatever, breaking down the low, and then had a stop up here, even if it turned around and stopped him out, I would have still considered that a good trade, a well thought out trade, right? It just so happened to play out in his favor. So if I look now at NVIDIA on the 15-minute time frame, because you got to look at all kinds of angles, depending on your time frame. I don't really know. 5-day moving average is starting to flatten out. We're below it, getting some weakness into this point of control over here. Yeah. Overall, inside trading day, another inside trading day right now. Okay, so that's my thoughts on NVIDIA. I'd rather just look for a semiconductor to go long, to be quite honest, and that's kind of what I've been doing, but yeah, I just don't like fighting things. Okay, somebody had mentioned AMD. Semis, man, they get a lot of love. So for example, okay, so take a look here. So AMD is one we've been tracking for a minute now, and it finally broke out. It looked literally just like Tesla, surprisingly, right? The whole consolidation got very tight, and then it exploded to the upside. Literally looks just like Tesla. Isn't that funny? We actually were on a live stream before AMD broke out. We were like, holy cow, this actually kind of looks, we were like, I don't know if you saw that. We were like, I looked at it, I was like, what the heck? Yeah, it's crazy. So AMD is actually just consolidating here. So a big run up, now it's consolidating. A couple more days of consolidation, I would be looking to long this for a breakout continuation. Right now, no. I would prefer a couple more days, and I might not get them, but I would like the 20-day to catch up a little bit more, and I'd like to just, come in on a little bit lighter volume, things to dry up, and just offer up a better risk to reward. SMCI, right? And look at SMCI. This one's coming back in. So it broke out. I couldn't chase into a breakout. But now it's coming right back into this kind of consolidation here. So I'm going to watch this one and see what happens. I'm not going to enter in necessarily right here at this point. But it is above a rising 5-day moving average. It's just getting a little bit of weakness here on the trading session. And we have Jerome Powell coming out here. Just chopping. Okay. What else do we got? AVGO. AVGO looks like it's just kind of consolidating here too. It doesn't look bad at all. Looks like we had a split or whatever. Kind of like the larger structure. It's kind of just, and it's getting tight right here. Holding above the 20-day. I don't necessarily know if I'd go long this either right here. I'd prefer to see some strength. But overall, strong stocks typically get stronger, right? So this was what, earnings? Boom. Then we saw some continuation. It pulled down, got very tight here into a 20-day rising moving average. You see how small these range candles are? Volume started drying up, and then it started breaking back out to the upside. Now it's kind of doing that similar, kind of like Darvis box, in this area right now. So this one at least has like a clean little area for risk that you can really hone in on there. Amazon has Prime Day tomorrow. Interesting. I don't know how that's going to affect the stock or not. I'm not too familiar with that. Like I said, I'd still be kind of like, that'd be cool if it came to reconnect with the 10-week or 50-day moving average. Dude, there's one name that was on my list that I saw. Oh, it was Hood. Yeah, Hood. I looked at it from the weekly perspective. I was like, holy cow, dude, this looks actually pretty clean. So you know how stocks move between 4 stages. Maybe you don't, but you have accumulation, markup, distribution, decline, 1, 2, 3, and 4. And you know, if I look at Hood, you had your decline stage over here on IPO, and this went sideways forever, basically. And now we're starting to get an early signs of a markup, and this could be, you know, just the consolidation. These things are catching up. Man, if this is the early stages of a markup, man, these things could be, you know, could be great, quite nice stocks in the future. Right now, it's breaking out a little bit of this type consolidation here too as well. I don't know, something to keep an eye on. I talked about ARK doing the same thing. Look at ARK, right? We talked about this one, it's breaking out, continuing. And if I look at the weekly time frame, I mean, is this the early stages of a potential markup? Hey, Darren, thanks for the super chat, man. It's Darren with the $5 super chat. Can you show how to sync our Patreon to Discord? Yeah, dude. So there's a getting started post on the on there. So do it from a computer or a laptop. So on the getting started post, oh, give me a second, guys. Look at on the getting started post. You see this? How to sync Discord to Patreon. And then DM me on Patreon, because if you already did this, maybe sometimes there's a problem, but most of the times, you know, it syncs up pretty fine. But if you click that link, it'll bring you to this page, right? And it says log in your Patreon, click on the settings, click on more. And then it just walks you through the 7 steps to just sync it. And once you do that, you get access. The bot will give you access into the Discord. The reason why I do this through Patreon is because of the automated bot that adds and removes and does all that back end work for me. And then Patreon does like the billing and all that stuff, like where I don't need to do any of it because I couldn't manage that by myself. Like this is just a way easier process for me. Okay, so that, yeah, and if you did that already, just DM me and I'll look into the account and see what's up, see if there's something going on here that's bigger than what I just stated. Cool. But once again, from a laptop or a desktop computer, those instructions work significantly better. When you do it try to do it through a cell phone, I just seen too many people run into problems when they try to do it from a cell phone. There's like a different way to do it for the cell phone. Okay, and then once again, hit me up if there's an issue there. And by the way, you didn't need to give me $5 for that. So reach back out to me on Patreon. Let me find out where your account is because I'm going to give you that first month for free. If you can't sync it up, I'm not going to. Yeah, you don't need to pay me for that. Okay, just remind me on Patreon. Okay. Where was I? My apologies, everyone. Where were we? We're just kind of going over a lot of different names. Okay, I'm going to see if anybody else said any other names. We have somebody mentioning, yeah, can I look at IWM? We did talk about that one. I think we already got it. Just leave it in the comment if you want me to do it again. JetBlue. Actually, I'm kind of interested to see how some of these airlines are working right now. Okay. Are we talking about these because earnings is around the corner? But overall, if that's not the case, see how price action got very tight here and it pulled into a rising 20, 50, 200. Even the moving averages are kind of like converging here. That's pretty nice setup. Those are nice setups. Now, I wouldn't chase into that, and we have earnings around the corner. But you got to think at some point these airlines are going to catch some reprieve or some relief, in the near future. And we're seeing a few days up here. Overall, what do we look at the trend? It's pretty much flat, but this nice move here may result in some follow through, may look for some consolidation, may look for the 20-day to rise, the 50-day to rise, and the 200-day to rise to actually look for a much cleaner setup. Now, if we go into the 15-minute time frame, you're like, okay, we have a negative divergence, and so the timing of this right now, you really would need that follow through, because you can see it's been already a pretty strong move. The 5-day is still kind of flat. So yeah, I would prefer to see more of a consolidation. Doesn't mean we can't continue that kind of like pop up here, but it's at least good to see. It's good to see some sort of price action coming in. I'm interested now how Boeing's looking, because Boeing's been getting slammed coming into earnings, and this one's kind of doing what it what JetBlue did, is pulling back into these averages, just well below that 200-day. So yeah, not the greatest look there. Zim, what's Zim? Is that ZIM, integrated shipping? Yeah, a lot of shipping names look good. Is this going to be a double top? I would say if we close below this, I'd be watching for a reconnect of the 200-day. But as it stands right now, it's pulling into a prior level that we saw bounces from. So if you go long out into this range, I'd probably be hesitant and have a stop beneath it. All right? Because we might potentially catch a bounce up and it goes back up. But if it starts breaking down, respect that price action, right? So you're playing a key level here if you're going long, key zone. Coco's talking shit to the neighbors. That's funny. Haven Protocol, XHV, amazing project with big things coming. Research it. Yeah, I'll take a look. What's XHV? That sounds familiar. Haven Protocol. I'd have to look later. Yeah, I'm not too sure. Always use same account. JWA. So, Conquer. No, I want to go on Twitch, but I'm having an issue. Apparently, it's just not loading. Same with Same with X. I don't know why. What's going on, man? I definitely multi-streamed to Twitch and Twitter or X or whatever, and I can't. It's not working. It's annoying. You took the sphere trade. Nice. Got out of Palantir. Yeah, we take a look at Palantir actually. And then Shack. I haven't seen that one actually for a minute. Let me see here. Shack. Yeah, it's kind of doing what we called out. Apparently, probably the last time I talked about was that line. Just duplicate that. It's kind of doing it right now. Sort of. Not really. I mean, geez, this would be annoying to trade, actually. I'm looking at this right now, and I'm like, oh, man. Like, do you see some of these days? Like, bam, it looks like it's breaking out, and then it comes back in. Bam, it looks like it's coming back. Comes in. Oh, bam, it comes, and then it shakes back down. So right now, it's pulling into, it pulled into, a rising 200-day, declining 20, declining 50. And it looks like, I mean, just like it did over here, it looks like we can see some sort of a break and pop up to the upside, but you just want to respect it, if it starts breaking down underneath that rising 200-day. But overall, I mean, it's not a horrible looking chart, that's for sure. It's just these days those were really tricky. I can see the visual frustrations on people if they traded these. They closed at the high of day too, and then they just completely flattened out. Eventually, probably we'll see a breakout, and it looks like, hey, potentially it's right around here. Maybe, right? But overall, that looks pretty clean. And then the weekly time frame, I mean, look at the weekly time frame. This even looks a little bit better in my opinion. Let me remove that. Yeah, I mean, good call out. Good looking chart. Good call out. Okay. Like, look at it. It got way ahead of itself, and then it's taking multiple weeks, like many weeks. This is a weekly time frame coming back in, but it's coming back into that rising 40 week. So if this is a bigger pullback and it opens the door for continuation, and we're in that, you know, right, we go through markup, distribution, decline, accumulation, right? Right here, it had multiple weeks of sideways price action. Look at, and then we followed through and broke out to the upside. Pulled in here, right? Back into the, when it was rising, bam. So if this is like a bigger structure here, like if this is actually a larger structure and we're legitimately in an uptrend on this name, and we just took many weeks to consolidate and pull back, I mean, even a move to this prior swing high is just incredible. I can't draw it, but you see what I'm saying? So yeah, I like that. Hey FT, yeah, I just saw you. I just saw you post that there. Hold on, I'm just gonna answer via chat. I'm gonna have to take a little break here anyway soon. Check out TSM. What just happened? TSM. Yeah, I'm not interested in establishing a new position in TSM. I would prefer to see consolidations, right? It's like this thing is rent far and fast. I mean, look at the weekly time frame. So clearly, like the strength is to the upside. So if I was trading it shorter term, I'd be just looking for upsided trades. But for like the daily, like setting up a swing trade, like we are getting some consolidation here. But like I said, I would prefer it to go like a little bit longer in time, and then, you know, wait for, like I would have to wait for earnings too. So 7/18, you know, in a few days we got earnings. So if I go to the trade tab and we look at, you know, the implied vol, you know, we're looking at like a $12, $13 move from wherever price is going into that, you know, which is fairly decent size. So I'd be waiting for that to happen. And seeing how that digests, because we might have a boom. If we have a big old gap up and nice bullish candle, I'd be like, okay, typically we get continuation on those. So I'd wait for the consolidation and try to play it to the upside. But yeah, it'd be just kind of a pause and wait sort of thing. And if you're in the trade, I mean, congratulations, you should be up quite a bit if you've just been in this writing it up. So you can update stops, you can take partial profits, you know, going into earnings, or you can look at like the risk, like, am I okay losing $13 a share here? And if you are, then it's like, okay, you know, or if you're not, you can reduce position size, whatever you choose, you know. PLTR, yeah. Let's take a look at PLTR. Powell comes out here in a little, about 30 minutes or so, I think. Yeah, about 30 minutes. Like, I don't really care what he says right now in this current moment. I care what the market's going to do with what he says. So if I can find a live stream of him talking, maybe somebody here can share a link in the YouTube, so I don't need to search for it while I'm live. But typically they drop the speech, the market reacts. We'll see what the market does, and then if he is taking questions, that could bring some more obviously volatility. Palantir looks like it's doing good too. I mean, this is at new highs for the year. We're breaking out, right, of this kind of like longer base. Like, this is, you know, back when we were talking about this, we talked about it over here, going into earnings, and people were like, it's a head and shoulders. And all I was saying was, okay, but you got to consider the big, huge move on earnings, because typically you can get some just longer digestions. and eventual follow through. So this has been a choppy stock to trade, but overall, I mean, the trend via the 200-day, the larger term trend has been up. So if I go to the weekly time frame, this is, okay, so here's a great example of what I talked about with Shaq. See how it went multiple weeks down and got tight, and it was into a rising 40 week. Now, this one's also into a rising 30 week, so it was even a better trend, or right here, but look at how it followed through. Boom. Okay, we talked about Shaq, right? Is it going to play out the same way? I don't know. We don't know, but what we do know is if we're just looking at price action alone, they're two completely different companies. No, I don't need, no, like, duh. But the price action is very similar from a structure standpoint. So if it plays out the same, you have very similar type of risk and very similar type of reward. Okay? Okay? Pretty cool, huh? Boom, 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 to the upside. Doesn't mean it's always going to play like that, though. Thanks, Phenom. AMD's consolidating. Yeah, AMD's consolidating on the daily time frame. Yep, just going sideways. Nothing bad. Consolidating a nice bullish move. Looks good. I'd prefer it to go a little bit longer. I don't always get what I prefer, but sometimes I do. CCJ actually, I mean, it looked pretty good. We saw a nice little breakout here. Good volume. It's coming into earnings, so just be aware. And it's coming in a little bit right here, kind of consolidating that big move. Not bad. Still holding strong here. That's the link. You shared a link with me? Hey, Dominic, did you share a link? That's the link. Let me see. Powell's speaking. Powell's not speaking right now. Is he? It says 9:30. It's 9:07. I don't know. I didn't look into where he's speaking. I don't have my stuff. If somebody could just post a link, I can bring it up, but it's in the chat. Why am I not seeing it? Oh, dude, I don't think I have. I don't think I allow for people to post links, dude. Yeah, Dominic, if you have Twitter, can you just at me with the link, or just tell me where to go? Just tell me what website it is. Is it just the Federal Reserve website? Is that where it's at? I'll just look at it. Give me a second here. I just didn't want to take a break. It's just the Fed website, probably. No, that's for the 12th. Okay, yeah, just tag me in Twitter. I want to take a quick break before that comes up anyway. It's at Mike P. Silva in Twitter. If you're on Twitter. If you're not, then don't even trip. Or if you're in the Discord, just post it there. If anybody's in the Discord. Like I see it here, but I don't know where. Let me see. I see it on the calendar. Let me view it and see if there's a link. Oh, there it is. I got it. Wait. No, I don't got it. Give me a second here. 15th. Where you at? Yeah, I found it. Okay, I got it. Cool. All right, I got the link, so we'll post that up. Let's do that here. And now we know, Jay Powell. All right, so what are we doing right now, guys, on the S&P 500? I know we went over, sorry, my camera's overheating again. Dude, I think I have the most problems with my stream than anybody in the world, okay? All right, so give me a second here. Okay. I did go dark. Thanks, FT. Okay. Thank you guys for helping me get that there quickly. Okay, so we went over a lot of names. I just want to quickly do a market recap, look here really quick, and then I'm going to take a quick break, and then we'll come back to Jerome Powell. We're pulling in right now in the S&P 500. Is it like crazy? No, we're still up on the day, 55 basis points. We're pulling back into the daily expected move, right? The higher probability, and we're above the week to day anchored VWAP. So watch for the anchored volume weighted average price. Market net flow here. We did lose that convergence. We stated, right? Or lost it over here. I think was when we stated it. Came back, went right away. And market's just kind of going sideways, chopping around. And this is normal going into Powell. We can turn right back around. We can come back in. Just be aware, right? So this is a great analogy today, in my opinion, right? Let me know if that was a good analogy, if you guys even caught that when you were live. But we simply stated that, didn't like the look of it. The dips were very, very tiny. It was like algorithmic driven. It was like you're climbing a mountain, running out of oxygen. And then in hindsight, right after the fact, you're like, whoa, see? They're taking a break. They're breathing it in. So in hindsight, it looks amazing. We didn't know it was going to come down there, but that's what's going on right now. And then from a gamut perspective, we'll look here, and we came up to that 0 to 56.75, and we're coming back down to 56.50 right now. And that's been kind of where we've been at for the day, 56.50, 56.75. Those were the two levels. And not much more than that, right? Not much more than that. Kind of right there at daily volume weighted average price. Kind of just broke below it, saw some volume come in. That's pretty normal. And we'll see if that actually holds now. We'll see if we can recoup from this and hold these levels, or if it's going to come, obviously, back in. Okay. Let's do this. 25 minutes to Powell. Ish. Okay, I'm going to take a quick break. I'll leave up my book map. Quick break. I'm going to leave book map up. Okay, I'll be right back, all right? And thanks, Stig. Appreciate that. All right, I'm back. I'm sorry, one second. Sweet Cheerio. Test. Can you hear me? Yes, you can. Ben. All right, we got 10 minutes till Powell. I'm gonna pull up. Somebody's asking me something in the Discord. I want to just see which ones he's talking about here on NQ. Give me a second here. Okay, we're back to the opening range for the trading session on NQ. This is the first 30-second opening range. Somebody had asked me about these dashed lines. I think that that's what they mean. I do not manually draw these in. This is the opening range indicator. It's the 30-second OR. I believe that this is a free indicator, but I think you need premium TradingView in order to see it. And then what it's doing here, all it's doing is identifying, so each line is the high to the midpoint, right? So it's, you know, if you play the breakout of an opening range, you know, in your stop is at midpoint, for example. I'm just using an example. That would be 1, 1, you know, 1. So that's all that is. We got Jerome Powell coming up. Market net flow is the cumulative net premiums for puts have been pulling up. No convergence, right? So this is where you have those counter trend moves. Let's wait for Powell. Coming on in 9 minutes. Affirm is getting spunky. MicroStrategy, SMCI. Yeah, we did talk about those ones. We didn't talk about Affirm. Affirm has kind of been on my radar actually for on the larger time frame. We go. So yeah, it is getting a little spunky today, ain't it? Up 7.35%. I like the weekly time frame because it kind of slows things down a little bit, but you can see this like a lot larger. I mean, I don't know if we'd call this a rounding bottom, to be quite honest, because it's so deep. It goes from like $10 to $50. So I don't know if I'd really consider it that. Probably have to look at a log chart, but you know, it goes sideways for a while. This is potentially stage 1. This was definitely stage 4. That's a decline. So after decline, you kind of go sideways or accumulate, right? And you see pockets of good volume. Then the moving average is starting to pick up here. You saw this. We saw a nice move. And now multiple weeks of sideways price action. MACD might be trying to make a turn here. You're below the 40-week, below the 30-week. You're right at the 10-week. But if this does hold, right, and starts to break up to the upside, I mean, this could be a boom. We could see a move right back up to 50, right? But if we don't, like you have your risk here, potential reward here, right? That's just how I look at things. Risk versus reward. Okay. Mike, how do I get settings on Patreon? I can't open up my Patreon account because it's going to look different from yours, but settings on Patreon, I mean, it's... Are you on a desktop? Like it's right on the, like, so if you log into Patreon, it's right on the left-hand side. Like it looks like this. Like, okay, give me a second here. Well, my platform is going to look a little bit different because I'm on the creator side of it. Let me see if I can, yeah, no, I'm on the creator side of it, but it looks like this. Settings. It's on the left-hand side at the bottom when you log in on a desktop or on like the website, not from the app. I'm not on the app, I'm on the website. There's a settings and you click settings and it'll bring up, it'll look like, yeah, mine's gonna look different than yours, but yeah, but their settings is right there. Should be. How do I log into Patreon? You go to the Patreon website and you should be able to just click log in. There's a login on the website, so you go to patreon.com. Did you sign up already? Are you signed up patron? I feel like signing up is more difficult process than just going to the Patreon website and hitting log in. But there should be a login button there. It's just like any website or anything that you order online, there's going to be like an option to like add, log in. Like if you ever used Amazon or anything like that, there should be a way to log in to your account. Take a look at Ulta. Yeah, Darren, if you go to patreon.com, there should be a button to log in there, like to go to your account or my account or log in or something. Because that's also the way that that's just how everything is set up. So go to Patreon. Yeah, I mean, I'm on the Patreon website. It literally says it right in the top right. It says log in, get started. It looks like this. I mean, the picture changes, but it looks like this. It says log in right here. Right in the top right. And when you do that, then you'll see settings. You log in with how you signed up. Yeah. There, now I logged in as a regular member, so now I'll show you. It'll look like this on the left-hand side. Right, and then settings is right there. There you go. Now I don't know how to go back to my settings. Give me a second here, people. Okay. Oh, man. Okay. Okie doke. Let's take a look here at the markets. We'll pull up Ulta too. We're just floating around the daily volume weighted average price. We got Jerome Powell in literally 2 minutes. Ulta's just a little all over the place. You got it? Okay, cool. Ulta's down so much today. I mean, it's only down like, well, now it's only down 2.38, but it was down more. It's just going sideways, so it's literally within this range. It gapped up, it came back in, just back testing here. Seen a lot of volatility. I don't really know. Maybe there's something in the retail space going on. Maybe it has something to do with like Macy's, right? There was news around Macy's about whatever, something not working, and this thing gapped way down today, 12%. So maybe some of these retail names are kind of just feeling the pressure here. Could be something simple as that. All right, we're coming into Jerome Powell. Wow, that sounds cool. Hey, put on some tunes for us while we wait for the economic club. Yeah, something like that. Yeah. Let's make them feel good. No. Why did I do that? That's not what I wanted to do. There we go. Wanted to make it smaller, but that didn't really work. No. Dang it, how do I do this? There we go. I guess I'll just keep it like that. All right, so on the daily time frame as it stands right now, we're just floating around the daily volume weighted average price and the daily expected move, not daily time frame, 15-minute time frame. Just listening to, why is it only coming out of one ear too, this audio? They have to make it come out of both ears. The market awaits Jerome Powell. Here we go. I'm assuming the speech will drop. We'll get some volatility. I'm going to just look at the Thinkorswim platform. Stairway to heaven, highway to hell. That's a good analogy for today's trading session. All right, we're below the daily volume weighted average price right now, back inside the daily expected move. As far as the opening range goes, we're holding above that there, the 30-second opening range. And we're right there, roughly at that 56.50. It's a nothing burger day, people. 47 basis points to the upside. Still up on the day. Probably call it quits soon after we get a little bit of volatility here with Jerome Powell. It'll be, again, approximately at 12:30 p.m. Eastern Standard Time. That's what I love to hear, dude. Time ranges, proximity. Bro, I'm like seeing this stuff on Twitter, man, and like all these posts. Dude, some people just should not be typing things on the internet and giving their opinions or thoughts. Some people should just be quiet. Holy moly. What's up, Jalen? Yeah, I went live on all platforms, but unfortunately, I think only YouTube is the one that's working. Gold's still rallying. Yeah, I don't know when Jerome Powell's coming out, so let's see what gold looks like. Gold looks strong. Gold strong like bull. Still just floating around these highs. Gold is almost there. It's not too far off. Big moves, man. What's silver doing? The dollar might be coming off a little bit more if this is the case. Let me see here. Is the dollar coming off? No, the dollar's back up to the day. It's up slightly. Nothing crazy. Silver. Let's take a look at actually copper first. This copper just consolidating after its recent little pop there. Silver's up slightly on the day. Getting quite a volatility, but overall, silver chart looks pretty darn strong. It looks pretty good right here. It's holding up. Now, if it starts breaking down, look for a reconnect of the 20-day, maybe 50-day. See if it sets back up. But overall, it's still holding up rather well. Yields up slightly on the day, the 10-year. Coming off the highs, though. And we're just listening to fun music right now because Jerome Powell is coming out. You know? Featuring the Honorable Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Welcome to the Economic Club of Washington, D.C. Chat for this live stream is going to be disabled. The headphones I'm using are DT 990 Pros. They're all right. They sound fine. You know they feel guilty when they disable chat. Ah, shit. Let's calm everyone down and play some cool jazz. Dude, it's 7 minutes past. Where are these people at? Are the miners moving with gold today? Let's take a look here. I'm not too sure. I have a position. I should probably pay more attention, but this is a great feeling when you have a position, you don't need to worry because it's not actually oversized. Let me see. What's GDX? No, not GSX. GDX. Yeah, GDX is up 0.55% on the trading session. Let's take a look at GDXJ. Those are junior miners. Up a little bit more, makes sense. And then I have a short position. DUS is down about 1%. Kind of chopping sideways. Kind of just been in and out. I didn't add to it yet. I think that maybe I might consider it if we get more of a pop. I was already considering getting out of it this morning, as I stated earlier, but I'm still in the position, and I have long positions on too, so I'm just chilling with it. It's my only short position that I have on is that. The other short positions I took was shorting S&P 500, I shorted Tesla, and I shorted semiconductors, and I was in and out of those in a day and a half. Or same day, I can't quite remember. All right, here we go. Jerome Powell.
Hey, everybody. Can I have your attention, please? Thank you.
What's going on here?
So we're very honored today to have the Chairman of the Federal Reserve Board, Jay Powell,
Is it just audio?
as our special guest. Jay, thank you very much for making the time.
Great to be here.
Oh.
So, over the weekend, there was tragic events in Pennsylvania. Some people wondered whether that would affect the markets today. Can you give us any insight as to whether you think it's had any impact on the markets?
David, I think I'll leave the markets out of it for a second if I can and just say that it was really a very sad day for our country.
Smart reaction.
Violence has no place in our society, and I condemn it in the strongest terms. I know we all do. A man died at a political rally. 2 other people were critically injured. It's just a sad day. And I'll say that I'm grateful that the injuries to the former president were not more
Sorry,
serious.
I'll go louder. My bad.
I'd rather not comment on the markets. It's too...
My apologies. Thanks for telling me.
Okay.
Too,
So let's get another answer that you don't want to give.
no foreplay, huh?
So there are a few billion people in the world who are
No
waiting to see what
foreplay?
interest rates are going to be
That's
doing.
crazy.
Do you have any insights on where interest rates might be going?
So I'm going to take that as a great opportunity to talk a little bit about the economy and then talk about where that leaves us with policy. So I would just start by saying that the U.S. economy has performed really remarkably well over the last couple of years. 2023, last year, was a year in which the economy grew well above 3%. The labor market remained very strong, unemployment remained very low, and inflation came down at quite a sharp pace, particularly in the second half of the year, by a very large amount. And that forecast was almost unheard of. It was unheard of before 2023. So big upside surprise that year. This year, we had expected the economy to slow a bit gradually, the labor market to continue to gradually cool off after being overheated a couple of years ago, and inflation to continue to make progress. And something like that is basically what has happened. The economy is growing now at about 1.5% in the first half of the year. Most forecasters have about a 2% growth rate for the full year. The labor market, again, has moved into better and better balance to the point where I think you can now say it's essentially no tighter than it was in 2019 before the pandemic. Remember that the labor market of 2019 was a very strong labor market. So we're back to that place, no longer overheated. On inflation, in the first quarter, we didn't make any more progress. The second quarter, actually, we did make some more progress. We've had now 3 better readings, and if you average them, that's a pretty good pace. So turning to policy, your question, what we've said is that we didn't think it would be appropriate to begin to loosen policy until we had greater confidence that inflation was moving sustainably down to 2%. We've been waiting on that, and I would say
it's like
we
bullish
didn't gain
above
any
56.50,
additional
more
confidence
bearish
in the
below
first quarter,
56.50
but the 3
right
readings
now.
in the second quarter, including the one from
We're
last
above
week,
it, so.
do add somewhat to confidence. We've also said that we're a dual mandate bank. For a long time since inflation arrived, it's been appropriate to focus mainly on inflation, but now that inflation has come down and the labor market has indeed cooled off, we're going to be looking at both mandates. They're in much better balance, and that means that if we were to see an unexpected weakening in the labor market, then that might also be a reason for reaction by us.
Okay, I think I understand. So to put it in terms I can for sure understand, the markets are suggesting, the futures markets, that there's a 90%
They
chance
love talking about the markets right now.
that the Fed will lower its discount rate in September.
He's talking about
Do you
this right
think
here.
the markets know what they're talking about?
So
85% right now.
So today I'm not going to be sending any signals one way or the other on any particular meeting. So just to ruin the fun right at the beginning.
Oh.
I simply, we're going to make these
He knows
decisions
exactly
meeting by meeting,
what they're
and we're
doing
gonna
and
make
what
them
he's
on the
doing.
basis of the
It's
data as
crazy.
they come in, the evolving
I mean, it's
data,
not crazy,
the
but
evolving
it's-
outlook, and also the balance of risks now that the 2 mandates are basically close to being in balance.
All right, there are some people who say that the Fed would not like to lower interest rates in a presidential campaign period because you could be criticized for helping one party or another. Do you have any comment on whether that's an accurate view?
I do. So our undertaking at all times is that we'll make our decisions based on the incoming data, the evolving outlook, balance of risks, and only on that. We don't take political considerations into account. We don't put up a political filter on our decisions. That would not, it's hard enough to make these decisions based on the appropriate factors. If you're going to add a whole different filter in an area where we're not experts, that's not going to improve the quality of our decisions, and it's also not the orders we have from Congress. Our orders from Congress are to use our tools to foster maximum employment and price stability, and to do so without political considerations. That's what we're always going to do. If you look at the modern record, that is what we do, and we don't think about election cycles or anything that's political.
Okay. So the Fed has set a target for inflation of 2%. Now, can you clarify, does that mean that the inflation rate has to be at 2% before you're ready to move, if you are ready to move, or does it have to be within sight? And what does it mean to be within sight?
So when we change interest rates, that tightens financial conditions, and that in turn affects economic outcomes, growth, labor markets, and ultimately inflation. but with lags that can be long and variable, as Milton Friedman famously said. And the implication of that is that if you wait until inflation gets all the way down to 2%, you've probably waited too long, because the tightening that you're doing, or the level of tightness that you have, is still having effects which will probably drive inflation below 2%. So we've been very clear that you wouldn't wait for inflation to get all the way down to 2%. Our test has been for the past quite some time that we wanted to have greater confidence that inflation was moving sustainably down toward our 2% target. And what increases that confidence in that is more good inflation data. And lately here, we have been getting some of that.
Okay. So when you say we, let's talk about who we is. The FOMC, for those who don't follow Washington acronyms.
And we're back to the opening range for the day,
what?
the 1 minute
What is the
opening range for
FOMC?
SPY.
It's the Federal Open Market Committee.
Still up,
Okay. And who is
43
on that
basis points
committee?
from the gap.
It's a little bit complicated, our structure is. We have 7 governors here in Washington, all nominated by the president and confirmed to staggered 14-year
Under
terms.
5650, I think
And we have
that's the
12
time to be
Reserve Bank
cautious. Above
presidents
it
at
is
reserve
okay.
banks around,
Just given the
around
context of
country.
this call wall
all
here for
19,
0 date.
7 plus 12, are participants
Market
on the
net
FOMC.
flow, we lost convergence,
In
and the
any
red
given
line
year,
started to overtake
all
the
of the
green
7
line, which has been
governors
heading
vote,
down. This
and
means
5 of
chop.
the 12 Reserve Bank
If we start
presidents
getting
vote.
red
But
convergence,
one
I
of
think
the
we got to be a
voters is
little bit
always
more
the New
careful
York
here.
Fed.
Okay. And so when you have an FOMC meeting, how many do you have a year?
We have 8 a year.
Okay. So you have 8 a year, and when you get together for 2 days or so?
We do. So it generally starts at noon or in the morning of a Tuesday, and we go all day. We generally talk about the economy, the financial stability issues, whatever special topics there may be. And at the end of the day, each person speaks on those things, and I speak at the end of that day. Then there's a brief presentation on monetary policy, and then we go to dinner upstairs in the Martin Building, and we come back the next morning. We come in at 9 o'clock, and we talk about monetary policy until we're satisfied with the outcome on monetary policy, and that usually takes most of the morning.
Okay. So when you go into an FOMC meeting, the first day, do you pretty much know where you want to come out at the end of the second day, or do you want to listen to everybody and you haven't made up your mind yet?
You know, the way it works is that, I talk to the other 18 participants regularly, and I talk to all of them at least once in the 10 days before the meeting. And I'm thinking about this 3 or 4 weeks before the meeting. What should we want to achieve?
5690
what data do we
is
need to
a
see?
pretty
How do we want to change
pretty
our
decent
communications
sized
and all
level
those
down
things?
there.
And so I talk to people, listen to them, and I try to put together
For ES,
an answer that has broad support on the
it's been
committee.
there
And so when we go
for a
into
little
the
bit.
committee on Tuesday morning,
If it starts
you know,
breaking down from that level,
I'm
obviously volume can pick
confident
up.
usually that I know where this is going to go, but things happen. We get data during the meetings sometimes, events
And
happen.
underneath the daily
But
volume weighted average
largely
price
you
for
go
ES,
in
so.
kind of knowing what's
Yeah,
what
just
the
chalk
likely
here.
outcome is. And that's the
I'd
design
rather
of
just
it.
let the market digest
So
anything before
normally,
trying to
if
be
somebody
directional.
calls somebody, you
bias
call
here.
all the other board members, FOMC
Doesn't look
members
too
from time
hot.
to time. When you call them, do you have a trouble getting your call returned, or you get you get a call right back, or do they take your call right away?
These calls are scheduled generally, and
see
they
a
go
little
all
across the
day
board
long. I
how
have
everything
like
else
the
is
Friday
responding.
before the meeting. I think I have 11
Bitcoin's moving.
half-hour calls.
That's
and it's
working to
pretty,
the upside.
we talk about the economy. We talk about very specific
some of those
aspects
charts are
of the
too.
economy, about our
Yeah,
mandate,
Mara.
and then we talk about
These are all
policy.
names that we
So
talked about on
there's
the
a lot
last
to
brief.
talk
This is
about.
up now
I take pretty
15%.
careful notes. And people
Riot's
think
been
by
going
this point they've read
up
all of the
13% now in the
preparatory
trading
materials
session.
probably twice. They've talked about it with their staff.
Cypher up 20%.
So, you get a really good sense of what people's thinking is.
Talk about
it's a very good process.
But you don't feel
Just
you
talk
have to have
about great
unanimity when
moves,
you
holy
make a
moly.
decision, right?
Would you
No,
chase these? I
I
wouldn't.
always try
But,
to
yeah,
to
look at
listen
this.
carefully
Look at
to
those things.
everybody, and I find that if you do listen
Hello.
and
That means
understand
MicroStrategy is
people's points
probably
and
up there
try
near
very
15.
hard to incorporate them into what we're doing,
15.33%.
for most people, most of the time, that's
Dollars
gonna be
up slightly on the
enough.
day.
People do dissent. That's completely fine.
kind of waffling
We
back and
actually
forth. It
have,
had
given that
initial
we have
reaction was
12
to the
reserve banks
downside
with
pretty
their own economic
severely.
staff, and
Since
people
then,
with
recovered a
different
little bit.
backgrounds on the board and among the reserve banks. We have a
High
disparity
yield
of
came
views
off
at
a little
every
bit.
meeting on every question. But people do, I think there's a
SPY just floating around its
you
opening
want to
range.
dissent on important things, and so people are perfectly able to dissent, and
gold.
when they think that's appropriate, they do.
So a lot of people in Washington,
Initial
government
reaction was
agencies are
strong,
very
came
good
in a
at
little bit.
leaking things. You're not that good at that. Why doesn't the Fed leak more? Why don't you kind of leak a lot more about what you're going to do? You just don't leak that much.
I'm kind of proud of that, actually. We do take our obligations to confidentiality very, very seriously. And because we know, how consequential it would be for someone at the Fed to be leaking. We just, our whole success depends on having the public's confidence that we're ethical and that we're working on behalf of all Americans and not on behalf of ourselves, and we're not leaking and that kind of thing. So we do have a culture. When we're working on for example, a regulatory matter or some matter involving one of the banks, it never leaks out of the Fed. So I am proud of that record.
Okay, so if you go back in history, when inflation began to arise after COVID, at some point people said, including you, that it was transitory. In hindsight, what do you think people missed about the nature of the inflation? Why was it more enduring than people initially thought?
So this is a question that people will be writing papers about and debating longer after all of us are gone. And it's early to say. It's actually kind of soon to be answering it. But I think so. Here's my answer to that question. When inflation arrived in March of 2023, it was really coming out of the goods sector, and it was connected to really high demand for goods, and it was. The supply chains, global supply chains, which account for most manufactured goods, collapsed because of too much demand and because of COVID. And to us, that looked like a temporary, fleeting situation. We also lost several million people out of the labor force, so wages went way up as the economy really boomed when we reopened the economy. And we thought, we were getting vaccines were coming in, and we thought that would fix itself too. Kids would go back to school. We essentially overestimated how quickly the economy would return to normal. These things finally did happen in 2023, but they didn't happen in 2021 or 2. And what we meant by transitory was that it would go away fairly quickly without the need for our intervention. You don't want to intervene with interest rates if something's going to go away quickly without us intervening, because monetary policy, as I mentioned, works with long and variable lags. So the law is you look through things like a temporary oil shock. So that was the mistake, was that it actually didn't reverse itself. The problems with the supply side didn't reverse themselves until 2023, when they really did, when we got a big burst of employment, and also the supply chains were fixed.
So in hindsight, now knowing everything you now know, would you have done anything differently? Would you have had less quantitative easing? Would you have changed interest rates differently? What would you have done differently now knowing everything we now know?
It's almost unfair. Hindsight's always 20/20.
There we
right?
go. Good.
We remember what we were doing in real time.
Cause all kinds of craziness.
We went from a really nice economy in December of 2019 to a global partial shutdown of the economy. And we were contemplating, there was no thought that vaccines were around the corner. The economy's closing down. We were looking at severe and perhaps prolonged downside risks. Literally people thinking and doing work on, are we going to have another depression? Is it going to be the 1930s? So governments around the world, and in particular the United States government, really went to work to provide a lot of support to the economy. We did everything we could, including many things that were red lines that we'd never crossed. We crossed them to support the economy and support the financial system. And it was all done because we were managing severe downside risks.
NQ is still holding above its opening range for the day.
We did not have a depression. And part of that is because of what we did. Then the economy reopens.
Climbed a mountain.
And demand is very, very strong. And we saw a big burst of inflation everywhere, including in the United States. It was different in different places. But so that's what happened. And it's not, that's how I would answer that.
Okay, but so what you did, you're happy with what you did in hindsight, you would say?
In foresight. I think that the work that we did in 2020 in response to the pandemic will stand up very well in history. I think people will look at the things that we did, and essentially the financial system was grinding to a halt all around the world. We acted, we were the first central bank, and we were the most supportive, and I think that work will hold together.
The most supportive.
When historians are looking back on it in a long time. I think when you get to the inflation era, that becomes a different question, and people are going to be arguing about that for a long time.
As a result of the action you took and the economy was thought to slow down a fair bit, and many people use the phrase hard landing to describe, hard landing is a euphemism for a recession, I guess. People thought in 2023 we might have a hard landing. People thought in 2024 we might have a hard landing. And none of these people were economists, professionally trained economists, but they seem to be wrong. So do you rely on these economists very much in the future when you're projecting whether you should listen to their views on where the economy is going, or how do you react to the fact that we haven't had a hard landing and disappointed all those economists?
So I'll just say that, as someone famously said, predictions are very difficult, especially about the future. Right. And also, I know a lot of economic forecasters, and forecasters are a humble lot with much to be humble about. It is extremely difficult. Every good forecaster will tell you that it's very, very hard to know what the economy is going to do. To give you a good example, in our Teal book, every FOMC cycle, there's a book that goes out, and there's a baseline forecast in that. And our forecasters are really the top people in the field.
Q's getting tight up here.
And they give you that baseline. They also give you a section in that book which shows 6, 7, or 8 alternative scenarios, which they also regard as plausible. So it's always a probability thing like that. It's not we've identified this one thing. So last year was a big surprise, and it was a big upside surprise. So of course we welcome those. We'd be happy to have more of those. But it just was one of those things where where things turned out much better for a whole variety of reasons. I will say that on the hard landing question, I have always felt like that there was a pathway to getting inflation back down to our 2% goal on a sustainable basis without the kind of pain in the labor market, the kind of high unemployment that has been typical of tightening cycles and getting inflation down. And the reason why my colleagues and I thought that was that the labor market was so overheated that it could cool down quite a bit without having to. There still is apparently no slack in the labor market. The labor market does not have slack. Essentially, you're at equilibrium now. But look where inflation is. Inflation's at 2.5%. So this was in defiance of a lot of conventional wisdom, but we thought that was right. And that says that you have to be, one thing you learn is humility in forecasting, so I wouldn't rule it out, but I would say that the kind of hard landing scenario is certainly not the most likely or a likely scenario.
So you have said you have a target of 2% inflation. You want to get it in sight of 2%. Do you have a similar target for unemployment? If unemployment went to 4%, are you saying, well, that's okay because we don't need to do anything because 4% is tolerable? Or do you have such a similar kind of target as you do with inflation?
So you can't reduce unemployment to a single number
that range.
For a couple reasons.
We did get pretty tight here, and we've seen a little bit of a pop through that level.
Probably moves through the cycle and over time.
Pretty clean little setup there.
Maximum employment is a function of many, many different variables. It doesn't reduce itself to a specific number that would be durable over time. So inflation,
back at the daily volume weighted average price,
inflation
week to date too as well.
Some years ago became the global standard that everyone aims for in one way or another.
Some people have suggested that the Fed's independence is not as good as people talk about it being, and that maybe we better have more White House coordination with the Fed. I'm sure you've heard about this.
I think that...
any comments on that?
I'd be happy to comment on what independence, on the point of central bank independence. So I think a long time ago, people have learned that a central bank that's independent of political consideration does a better job getting inflation under control. And that is accepted wisdom in all advanced economies around the world. It's also a principle that has very, very strong and broad support where it really matters, which is in Congress. You talk to senior leaders in both chambers, in both political parties, and they all understand that you want an independent central bank that doesn't run monetary policy to support or oppose any particular politician or political party.
Independence is one thing, but you still have some
HYG's not doing much,
information sharing. So how do you coordinate or share
XLU
information
is the one that kind of got hit the hardest today as far as
regularly meet with the Secretary of Treasury or White House staff people, or how do you communicate with them?
Kind of coming in from
there's a very standard set of relationships which doesn't change at all, administration to administration.
Dollar holding up, not seeing much price action here as well.
Council of Economic
Initial reaction was
Advisors
to the
is in
downside.
the White House. We have lunch with them.
Financials holding up,
every month
IWM
or
coming in
so, although
slightly,
they
but
get
also
canceled sometimes
up
because we're all
great
busy.
on the day.
That's one thing.
Energy, one of the top
I
performing
have
sectors, up
breakfast with the
2% on the
Secretary
day.
of the Treasury every week, unless she's traveling or I'm traveling.
Top sector for the day.
I have.
Yeah, when XLE's up and
Since
financials,
there was a National Economic
always a good
Council, there's
always a
been
good chance
an
that IWM's
irregular
up there with them.
slash sometimes
a lot of
irregular
financials in there, a lot of
breakfast
regionals,
with the head of the NEC, and
more
I do that
specifically
too.
KRE.
Do you ever get a call from the President of the United
This one's
States
coming in
saying
slightly
interest
here,
rates
which
are
probably
too
means
high
the
or
IWM's
something
doing
like that?
something similar. Yeah,
So, ever? No, I would say
just chopping around.
that, meetings with the president are
There's little
are
opportunities here and
rare,
there in the
inappropriately
chop,
so.
kind of like what we pointed out here, but
So
look, it's already
you
back
are,
down. This is why,
you were
this is why I'm
originally
just
appointed,
not interested in trading it.
to the board of the Fed by President Obama.
Nice pop, came
and
right
you were
back
appointed
in.
chair by President Trump and
Back under
reappointed by
5650,
President Biden.
not a place
and
to
your term as chair
really be all
goes through, I
bulled
think,
up.
May of
It's
2026.
above 5650, it'd be a little bit better.
So, any thought about
Market net flow,
staying through all
still
the way
nothing
through
here,
May
so
2026? You're going
chop.
to do that?
yes.
Okay. And if some president came along and said, well, you did a great job,
Miners are losing their
I'd like
gains
to
for the
reappoint
day.
you, would you
Yeah,
consider
maybe.
that?
I don't know. Let's take
I
a
have
look here.
nothing for you on that today.
Okay.
This guy. Yeah,
And
GDX coming in slightly here. It's just
Is
it's
being
flat
chair
on the day.
of the Fed
a little bit.
enjoyable job or not so much?
It
These
is
questions
actually.
are funny.
I
They're kind of
think I
comical
enjoy
today.
it, I enjoy it quite a bit.
The
I do.
Federal
First of
Reserve
all, it's a
Chairman
great honor. It's
legit
incredibly
said, "What, there's
interesting.
no-
I
no
love the people we
foreplay
work
today?"
with. I love the institution.
I can't believe he said that. It's hilarious.
At this time in my life, it's just been a great thing. I'm in my 13th year there now, and it's been
Comedy.
really challenging and all that. But what else would you want? I'm very happy doing the job.
So you're obviously in pretty good shape. How do you stay in shape? Do you walk a lot or
It was
do you
funnier
ride
when he said
bikes,
the
or
F
what do you
word.
do?
Yes, I do.
He's like, "Get
I
that
do those things. I
outta here."
swim, I ride my bike, I go to the gym
If
a lot.
anybody
I try to stay
remembers
fit, as
that.
you'll remember from our days together.
Right. So but when you were, let's say, riding a bike, do people, get out of the way, or do you have?
Nobody knows you with a bike helmet and goggles on. You're just another person on the
Hey,
road.
So I think you have said somewhere that when the Fed does lower interest rates, not saying that you're saying it's going to do that, but if the Fed does lower interest rates at some point, you didn't think it was ever going to go back to kind of the free money practically of years ago when interest rates are almost zero. Is that a fair statement, that you don't think it's a good idea to go back to interest rates as low as they once were?
The period between the global financial crisis and the pandemic was historically unusual from the standpoint that we had ever lower interest rates through that era, including a part of the era when, for example, sovereign debt of major European sovereigns was trading at a significantly negative rate. And so that was quite unusual. And still, even with rates that low, inflation was very low, below target. So the question is what caused that, and are the forces that caused that gone for now? And I think most people attribute the low inflation era to slow-moving forces like demographics.
We almost got out. We did get outside of the opening range to the
technological
underside
evolution, things like that.
on NQ. Not quite the
and
low of
those
the
may or may
day,
not have
but we're
changed.
just trading within the
But
opening range, and we're
but
below that
nonetheless,
5650
I look at
too, by the
where
way.
we are now.
I think I've already
funds rate
stated
is
that.
5.3%,
Whereas like be
roughly, give or
bearish more
take.
under 5650.
And
Could act
it
as
seem- it
a
feels
act
like
as a
it's
pin. Let's see
restrictive,
if anybody's
but
reaching out
not,
down lower.
Severely restrictive. So it tells me that rates, at least for now, the neutral rate must have risen, probably has risen from where it
No,
was
not
during
really.
the inter-crisis
5625
period.
would be the put wall.
And
It's
I mean,
not,
I think
nothing crazy.
Instinctively, I can't prove this. We're gonna learn about this empirically, but it seems to me that the neutral rate is probably higher than it was during the inter-crisis period, and so rates will be higher.
So the Federal Reserve, without saying you're going to lower
we're
interest
still at
rates,
26 basis
if you
points on
did
the day.
lower interest rates at some time,
Outside
I
of the upper
thought you
monthly
had said
expected
you didn't
move.
want to lower interest rates and then maybe say, well, maybe we made a mistake and we're going to
Market
increase
net
them
flow,
again.
there's
You
still
wanna
no convergence
have
here,
a policy
so.
that's fairly consistent for a while. In other words, lower interest rates but not bounce back and
Wouldn't be
forth
shocked
every
if we come right back
FOMC
to
meeting. Is that a
5650,
fair
but I'm not going to go
summary?
long into
That wouldn't be
5650.
a great outcome.
I
But
just-
we don't want to be
just
too
chilling
risk
again,
averse.
just
I
chilling.
think we want to, we know that
Let
the
the market
economy is
do its thing.
And the test we've said is we want to have greater confidence that inflation is moving sustainably down to 2%, or alternatively, if we see unexpected weakening in the labor market, or some combination of those two. And when we see that, and the data really show that, and that's reflected in our confidence and our understanding, then it'll be time for us to move. And We won't worry. Of course, it wouldn't be great if you were moving up and down quite a bit. That wouldn't be ideal.
Some of your predecessors used to speak in what I call Fed speak, which is to say incomprehensible to the average person. You try to actually explain things. Is that because you're not an economist, or you just like to explain things better because you actually sort of explain what you're likely to do at the Fed and then you actually explain it afterwards? Does that upset a lot of people at the Fed that you actually try to put it in English?
No, I don't think so. No, as you know, I enjoy communicating with people, and I didn't have a career as an academic economist. I'm not a trained economist, so I don't speak like one. And that seems to, I do hear a lot from, for example, people on Capitol Hill that they really appreciate that they can understand what I'm saying.
So today, the ECB lowered their interest rates recently. So why do you think the ECB lowered interest rates before the Federal Reserve? Did their economy is weaker than ours, or what? Yeah,
so they're different. There are differences if you look around the world, and the big difference between the United States and many other nations is just that our economy has been so much stronger. Europe went through, the European Union went through significant Eurozone, a significant period of very, very low growth, while we were growing, 3% plus last year. So we're in a different place. And I mean, actually, what's more remarkable about the current situation is how much there is in common between what happened. Inflation broke out everywhere. Central banks did kind of very similar things. There's little differences in timing in terms of starting to loosen policy, but really the era, I think, will be known much more for its commonalities than it is for its differences like this.
So when the FOMC makes a decision, let's say to increase rates or lower rates, they finish their final meeting, you are authorized then to go out and explain what it is. How long before, after the meeting ends, before you go out and publicly explain it? Is it 20 minutes or so?
It's 3 or 4 hours usually.
3 or 4 hours?
Yes, because the meeting might end at, I'm out at 2:30 p.m. That's when the press conference starts at 2:30, so usually the meeting's over by 11.
And you don't worry that things will leak out in that interim period of time, I assume?
No, I don't. Okay. People know better than that, I think. And
so in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI.
The Honorable Jerome Powell.
Calling up ChatGPT
What, no
and
foreplay?
saying, here's all the data we have. What do you think about would be a good idea?
Too
Have you
funny.
ever thought about that, or they're not going to like you to do that?
we haven't done that. I mean, we have done little things, like we've asked ChatGPT to generate questions for the press conference.
Oh.
And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
All right, so they weren't that great. Okay. So today, at the Federal Reserve Board, you are not involved in picking anybody who's on the Federal Reserve Board. The president makes those decisions. Do they ever call you for advice on who you might pick or they might pick?
It has happened, but it's, I would say,
Right back
not
up to
the
that
norm
5650.
now.
Okay.
The Reserve Bank presidents are different. We play a role with the search committees from the Reserve Banks.
Surprise,
on that.
surprise.
So every summer, there's a meeting of the Federal Reserve people out in Jackson Hole. What do you all do out there? I mean, I always wonder, you wear cowboy boots, you go on ride horses. What do you all do? Why do you need to go to Jackson Hole? Why not go to, someplace closer than to Washington, D.C., Baltimore like?
Cowboy boots are worn by some, but not all. I don't wear them myself. But it's what it is. It's an academic conference. So the Kansas City Fed, which puts this on, they'll pick a topic, and then they'll find really top economists to write papers about that topic, or more than one topic. You come to Jackson Hole, they present their paper, people critique it, they praise it, and that kind of thing. And that's the mornings. And in the afternoon, people go take a hike. And let me be clear, this is not a rate hike. It's an actual physical hike.
But you usually make a speech out there, I think,
Yes.
every year.
Traditionally, not every. I've done this every year, but not every Fed chair has done it every year. But I give the opening speech, and it doesn't have to have anything to do with the topic of the conference. I just give a speech.
And is it carefully worked on by the staff? You make sure you say something that sounds interesting, but you don't make any news?
No, actually, so I try to do, typically what I do is I talk about it's really focused on the economic outlook and that kind of thing at any given point in time. At Jackson Hole, I've tried to take a step back or move to a higher level and try to say things that have a little more generality to them and see what can we learn, for example.
Now, the Federal Reserve is over 100 years old. It was created under Woodrow Wilson.
Seen a little bit of a breakout in DOCS.
If you were around then, what would you have suggested they do better than they did in creating the system? Or do you think the system works pretty well after 100 years and you wouldn't change it very much?
Position set up,
so
I might be actually in this trade right now.
I would do what Congress did in 1933. So the original Fed didn't have an FOMC. It really didn't function very well.
This is one that was from Trade Ideas. I was looking for a breakout.
Early parts of the Depression or during other. So in 1933, the current structure was put in place, and that's with the FOMC, with the number of governors and
see if we can get
the
some
voting
continuation on
arrangements.
DOCS.
That arrangement is fine. It works really well. In the 70s, the dual mandate was added. But ultimately, we're not looking for any law change. We think we have the authorities that we need. We think that the law is in just a fine place.
Okay, so basically, you
I have
think
a
the
little
system
position
works
there.
reasonably well.
I was waiting more for a breakout
Okay.
to see if I can add to
And
it.
today, what is the biggest economic challenge you think facing the country? Is it growth?
If it breaks down
Is
from
it
the 50-day and this
inflation,
low, I'm probably just going to be
hard
out, and
landing
then I'll just try to
potentially, or
re-add if it
what
comes back
What are
up.
you most
and
worried
through.
about? What keeps you up at night, if anything, in the economy?
So I'll say in the short term, that's what keeps me up at night.
CLS,
Literally,
I like the look
thing
of it.
I'm
I like
thinking
the
about in
trend,
middle of the night is always
but I would
this
prefer to
balance
see
we
this
have
come
between
down and
not wanting
consolidate
to-
more.
If we ease too early,
And
we
SMCI,
can
I was
undermine
ready
progress
to
on
make
inflation.
some moves
If
on
we
this
wait too
one, but
late,
I'm just
we can undermine
paused out
economic
now.
activity. We can undermine the expansion.
Waiting to see how this
And,
kind of reacts and
so
responds.
We want to get this right, and getting it right is incredibly important for the people
AMD
we serve.
still
So that is
consolidating.
really, that's what I spent a lot of my thinking time on. Longer term, there are lots of things to worry about, but that's really what
So
keeps me up.
most people, they have dinner
Halliburton was
with
a
friends
great
sometimes. How
breakout.
can
We
you
talked
have
about this
dinner
one on
with
the
friends
last, I think,
without
live
thinking,
stream, or maybe market
what
brief, I
they're
can't
thinking
remember.
about? And do you
We had
ever
a
get
positive
suggestions
divergence.
from your
This thing
friends at dinner,
popped to the
this is what
upside,
you
so
should do?
killer
Or
move there.
how do you respond
Pax
when
was
they
another
kinda
one that I
say,
had a big
maybe
eye
you should
on.
lower
That's up
interest
over
rates? You
4%
just keep
today.
eating or what?
Or obviously,
You
this
might
thing gets some
define the
follow
word
through
friend to
there.
mean doesn't ask you about interest rates.
IWM is still continuing its little rally here.
No,
One
people
that
don't do
I
that generally.
wouldn't
People I don't know
recommend
will
chasing
always say,
if you're
hey,
in
cut
it,
rates.
if you're
Somebody
not
said
in
that
it.
in the elevator this morning.
Did that
Just let it
influence you or
consolidate and do
no?
its thing.
I said, thank you, sir. And no, but I mean, people say things, but it's fine.
KHC was
So
one. I forget
today,
when we talked about this, but there's a
for somebody
positive
that would like to
divergence.
be the
It's
chairman of the
breaking
Federal
further.
Reserve Board in the future, is it a job you would recommend to your best friend or your best enemy?
Starbucks.
I think it's a great job.
Down
I
on the
think,
day, inside trading day.
Again, the last thing.
Here comes
Chairman
Amazon.
Bernanke
Amazon's
said to
coming
me
in.
As he was that day, I went to see him that day, his last day at the Fed. He said, "You learn so much at the Fed."
Kind of what I was
Remember,
looking
Ben Bernanke was a
what I was
top
hoping for was
5 monetary
I
economist
still
in the
prefer to be
world
down a little
when
bit
you
more
arrived
and then
at
to start to see strength.
So
But
he
here we
learned
go.
a
We
lot
are
from
getting
the
that
Fed. So
pullback.
can you imagine how much I've learned, starting. So it's never felt like work. It's so interesting all the time. And
Mobileye.
also, the dedication of the people who work there, 90, and the staff. These are people who have
interested.
chosen a life of not being in the public
Disney's been beaten up.
spotlight. They just want to do their work and serve the public, and they're very dedicated.
Probably will have a
It's
bounce in the near
wonderful
future,
place,
but
and
just
I would recommend the job.
continues its
So the Fed is also
down
responsible
trend.
for, the way the Fed
I
is
like
set up, you're worried
AT&T.
about a stable currency, I assume, and stable, well, not currency, you're worried about, I guess.
Stable prices.
Inflation,
Yeah.
and you're worried about unemployment.
just flagging
But
out
you
here in
have
an uptrend. Earnings around the corner.
You don't make
though,
any
so.
decisions about what the impact is going to be on the
Still
currency
chopping around
of
in the
dollar.
markets.
In other words, the impact of what you decide to do on the dollar is not something you're mandated to worry about. Is that right?
That's right. The administration has that portfolio, the management of the dollar, for what that is. It used to be something different than what it is now. But for us, the effects of the things that we do or don't do on the dollar are just another financial variable, like equity prices or things like that.
Hey, but if you worry about inflation, as you obviously are, what about the debt the United States has? We have $35 trillion of outstanding in government indebtedness, and we're adding about $1.6 to $2 trillion more or less every year. Aren't you worried about that on the impact of the economy on inflation?
So I am very worried over time about the deficits that
Yikes.
we're running. It's not the Fed's job. We don't give Congress advice, but let me just say
Yeah, Bitcoin.
that we're on an unsustainable path. That doesn't mean that the level of debt we have is unsustainable. It's not. But the path we're on, where we're running,
going on here?
large deficits at a time of full
I'm just gonna pull
employment
a
and
Bido.
healthy growth, is not a sustainable one over time.
that-
And we really need to get to work
going on
on
with
that.
Bitcoin, man?
I would hope this is a
Hold on.
top line issue for
me pull up a
elected
different
people
chart.
whose job it is not our job. And I believe that if I do talk to quite a few elected officials in Congress, and I think there is a rising sense that it's time to do something about that. And it will take bipartisan action to address.
Let me ask you, in dealing with Congress, you testify, I think at least twice a year before members of Congress, and you do the House side and the Senate side. Have you ever suggested them having a joint committee so you don't have to say the same thing twice, or they don't like that?
This is in the law. It's twice in February and twice in July, so it's 4 times a year. This is the Humphrey Hawkins put that in, and it's a tradition. And so the Senate went first last week. The House went first in this March, so they alternate. I think it would take, I don't know what it would take.
Do you get a lot of
change that.
questions from members that you think are really adding a lot of good advice to you, or?
I think the members ask excellent questions. Yes, thank you for asking. They do. I'm generally very much pleased.
But
by
you
them.
spend a fair amount of time
Yeah,
with members
Bitcoin's
of
coming
Congress
into that
compared
range
to
we
some of
talked
your
about the other day.
predecessors.
It was
Is
basically,
that
I think,
because you
what did we
think
say,
that
like
they
62 to
add a lot of value, or you just think it's a
64,000,
good courtesy to do
maybe a
that?
little bit higher. I
think
can't
it's part of
exactly
our
remember
job.
what I said,
In our
but this
system
kind of
of
zone in
government,
here
it
where a
is
lot
the
of volume was
legislature
traded, we're
that
kind of
has
coming right back
oversight
in there.
over the Fed. It's not the executive branch.
Sailor
In
to
the
ship
parliamentary
tool,
system, they're
it's
sort
not
of
fully
one and the same.
updated, but
So it's the 2 committees.
we talked about how it started to
I spend a
turn
great deal
this
of
last
time
week, and we're getting some
upon that. I'll
follow through
talk to
today.
people,
I'm just
both
looking at
political
GLD
parties, House and
versus
Senate, just finding out
actually
what's on
gold,
their
the end of day
mind,
contract.
and really trying to
Introduced
take
contract,
on board their
but it is
thoughts
pointing
on
up
the economy and on
towards
what we're doing.
crossing over
And
to
I think they appreciate
signal.
that. And I think that
Not
that
there
to
yet.
me is really a big part of
And then we
this
talked a
job.
lot about those crypto
The Fed
miners that
depends on
absolutely
data,
exploded
but
today.
how good is the
I didn't trade
Fed
any of them,
data
but
collection efforts?
hopefully
In other words,
somebody
are
caught
you
some of
using
those
the same
moves.
data collection methods you used 20, 30 years ago, or do you, because of technology, you have better data collection methods than before? And are you convinced you have data that's as good as the private sector has?
Most of the data that we get is the same that everybody else gets. The unemployment data, the inflation data, not collected by the Fed. We do some data collection, and we've actually been, dabbling in big data efforts for more than a decade. So I think we're very focused on the quality of data and collecting different kinds of economic data. During the pandemic, of course, it became necessary to do all kinds of, find all sorts of, different sorts of data to reflect what was going on in the economy. We did a lot of that too.
So when you became the chair of the Fed, what was the best advice somebody gave you who was a previous chair of the Fed? What
comes to mind,
McDonald's in the chat. I wanna
I
see
can't
it.
think of one thing. I
the
thought
golden
that
arches.
what Chairman Greenspan said was
All right,
get a
we're
set
still
of
below
earmuffs.
5650. We came back into it. We're just doodling around that.
When
once
you
again,
eventually are not
that's
the
kind of
chair
like
of
the
the
pin
Fed
for the
and
day. If
somebody
we get
succeeds
above it,
you,
that'd be
what
more
would be the
positive.
advice
Below
you would
it,
give them about how
let's
to be a
watch
good chair of the Fed?
5625 as if that can grow.
To me,
It's
the,
not. We're getting a little
I think it's a very
convergence to the
special
downside right
American
here.
institution.
Not a really strong divergence,
And
meaning that
it's
we'll probably just
one
have
that
some
works
chop
to serve all
and pinning
Americans.
action.
And absolutely critical to that is staying in our lane, sticking to our knitting, not running to reach out to the big hot political issues of the day. And I think that's critical because once you do that, if that's going to be what you do, what's the case for your independence? Congress has given us these powers. They've left us alone to do it. And really we need to do those things and resist the temptation to expand that mandate. That's what I probably will say to my successor.
Now, when you want to go out to, let's have a dinner in a restaurant, do you worry that people are listening to what you're saying, they're eavesdropping, or you don't say anything that anybody has to make you worry about?
So that is exactly what I worry about. I have found that I get recognized now, and people at the next table are always listening. So we don't really go to restaurants.
So what do? You just go in a private room, or you don't go to restaurants?
If you're at a restaurant, you need to be in a private room because, of course, the people and by the way, if someone at your table were to be well served and start to speak loudly, everyone's hearing that too. Right. So you got to be. We just don't do that for now. We go to we eat at home a lot. We eat at friends' houses.
Okay. Well, your wife is here. Where is she? She's right there. How long have you been married now?
15. 39 years.
39. You had to add that
And
up.
to do the arithmetic, yeah.
39 years. And you have how many children?
3 children.
And any grandchildren?
We have 3 grandchildren, 3 little boys, the oldest of whom is 3, and all in the same family. So this is going to be quite a little place to visit.
Okay. Well, look, we've known each other a long time. I congratulate you on doing a great job at the Fed and avoiding the hard landing. And thanks for earlier telling me when you're going to lower interest rates. In our private meeting, I now know when interest rates are going to go down. No, actually, that's not true.
You said you wouldn't tell anyone.
Right, okay, of course. Jay, thanks for a great job you're doing for the country. Thank you.
Thank you, David.
Ladies and gentlemen, Steve Martin. Somebody else said that earlier. All right, there it was. There was Jay Powell speaking and not leaking. I didn't even try, dude. Speaking and not leaking. Get it? Let's take a look here at the Fed probabilities. Yeah, 90% probability now that we'll probably see a rate cut in September. 60, 70, 90. 90% probability that we'll see 2. Well, 60% probability that we'll see 2 right now. That's going to change. These are all changed, but it definitely, the market's pricing in like 1 or 2 cuts right now for the remainder of the year. So we'll see if that's actually the case. Markets below daily volume weighted average price, kind of just selling off down slightly here, but nothing crazy. This is like kind of a consolidation, the overall larger trend here. If I probably put on an RSI, there is most likely some sort of negative divergence that you can call out, like yep, right here. And it kind of came in. Nothing overly excited, people. Nothing overly excited. Just kind of a choppy day. You can see that market net flow suggested choppiness. It gave us some insight when we started losing convergence. We have a red convergence right now, but it's like dang, you can't even see it. Okay. So I'd say anything above 56.50 right now would be more bullish. If we're below it, you know, we might pin right back up to it if none of these grow. It's just a chop session right now. There were some trade ideas that we kind of went over. We went through a lot of charts today. I think I'm going to just call it quits there for the day. And go enjoy the rest of my trading session. Actually, I'm probably not going to trade today. So you enjoy the rest of your trading session. I'm going to go chill. Go get some air. Go on a walk before it's way too hot again. It's been so hot here. It's been so hot. You know what I'm saying? Yeah, market's coming here. See what the initial reaction is to being off the stage. Chopping right back up. Right back to 56.50. Yep, I'm gonna call it quits there. Careful, safe. I'll try to get into another live stream tomorrow if I can. If I can't, I'll definitely be having the stock market brief show. Thank y'all for tuning in. It's much appreciated. Next time I'll try to get it working on Twitter, and I'll also try to get back up on Twitch too as well. See you later, everybody. See you, Ben. See you, Daddy Trader. See you, Mike. Yeah, IK, I think Amazon could potentially be getting a little oversold, that's for sure, but I prefer it down in those lower areas. Supposed to be a cooler week? Yeah, about time, man. You're welcome, Moss. See ya, LJ. See ya, Giancarlo. Later, Mike Moore. See ya, Fly. See ya, AV. Love set match. Good seeing you guys. Everyone here again. Right back there at 56.50, people. Right back there at 56.50. If we start getting above it, maybe they might grow to 56.75. Market net flow, once again, not giving us much here. Choppy trading session up 43 basis points on the day. Daily volume weighted average price is just over